Well, hello to all of you. It's great to have everyone back online for a webinar. And I think from Dolph's perspective, I thought we were speaking to Dolph from Phoenix, Arizona, but apparently he's actually in Jakarta, Indonesia. So rather than it being nice and early in the morning, Dolph, my understanding is that it's midnight there.
And that's exactly right. It's just gone midnight, so I'm burning the oil tonight, but that's all right.
No, well, excellent. Well, it's great to have you online. Thank you very much. And fascinated this evening to hear what your thoughts are on the ground. I've just returned from America, so obviously got some of my own opinions, but it's nothing like someone who's living on the ground and is understanding really what is going on. And you and I have touched base regularly over the years, and but it's actually been over a year since we got together, and I'm fascinated just on some of your thoughts around what's happening in the world today, kind of where the risks are, what the opportunities are. And there are a lot of people online tonight that seem to share that sentiment, with hundreds having signed up. So we're really looking forward to spending some time with you this evening.
Oh, well, good. Me too. Me too. It'll be fun.
So just quickly for everyone who's online, you can see here that tonight I've prepared some questions, just in terms of some of the things that I'm interested in and wanting to understand from Dolph what's happening in the world, and like I mentioned to you, some of the risks, opportunities, and where you see the world's going. But equally, there's a chat option. So all you've got to do is just type in your question, and we'll be able to see your question. And I really want to kind of make this a dialogue, as we joke, as a campfire conversation where, if you ask questions, we can jump in. I'll try not break the flow. We've got some polls. We've also got some exciting things this evening. There's a very big competition which we're launching. And equally, if you guys stay online through the webinar, you're actually going to find out how we would like to give every single person who's on this webinar $100, so that you can actually participate and really take advantage. But without further ado, I want to crack on. And I just want to get a little bit into the introduction around Dolf. For those of you who don't know Dolf, for me personally, I actually read this book, Real Estate Riches, back at the age of 19, and it's a pretty well-worn copy of the book, because I've read it many times with lots of notes all over it, and dog-eared and earmarked, etc. But this book was really the book that got me going in terms of understanding real estate, understanding how you buy something with a twist. And really what I loved about it was that, as Dolf explains it, it's not a how-to book, it's a why-to book. Why real estate? What are the opportunities of real estate? And the other thing that fascinated me from a very young age is that Dolf was international back, however many years ago that was now, 20, 30 years ago, in terms of not just talking about the London property market, or the Australian property market, or the American property market, or the New Zealand property market, or quite frankly, the Indonesian or China property market. It was the international property market, and how you can do very similar things in different markets and achieve the same results. And it really fascinated me as an individual. But what I think is fascinating is that that was part of the Rich Dad Poor Dad series, which, if you've if you guys have, a lot of people have heard of that book. Robert Kiyosaki, he's done work with Tony Robbins in terms of wealth mastery, which is Tony Robbins' most elite training course in terms of how people can actually learn about wealth. He's got the psychology of wealth. He's got an event that he takes very high net worth individuals away to Lake Como in Italy, where they pay, I don't know, Dolph, I can't remember the number, if it's 50,000 US or 100,000 US, but it's a
No, it's only
substantial amount of money.
50,000.
How much is it, Dolph?
It's only 50,000.
Only 50. But it's 50,000 to really kind of, understand the psychology of wealth. And, it's a very unique set of individuals that go and really kind of take their lives to the next level. You've coached some of the best. And, one of the things that I spoke about in the intro to this webinar was, equally, whether it's a good thing or a bad thing now, I don't know, but you were part of, Trump University, and actually, helped with on the real estate side of things. And my point being there is nothing to do with the university, but the fact that you've actually had personal dealings with Donald Trump. You're not just someone who's got an opinion from the outside, but actually someone who got to know him in terms of who he is as an individual. So, I think that gives people, quite good perspective. And lastly, this is just one of a number of books that you've got that are New York Times bestsellers. You speak over 6 languages. And what I find fascinating, and I can never remember the number, but your books have been published in something like 25 or 30 languages. What is the number exactly?
I'm not sure myself. I don't know if it's quite up there, but we're adding new languages all the time.
Okay, but I think the point being is that you very are very much have an international flavor, and like you said, it's midnight. You're in Indonesia, and I'm not sure what you're doing there, but I presume you'll be educating and helping and teaching in that market. I know it's a fascinating market, Indonesia, and the real rising middle class that's there. I'm sure has tremendous aspirations in terms of real estate and creating global wealth within that real estate space.
That's very true about Indonesia. It always fascinates me that when you're in the United States and you meet with people who want to go global and they think of going to the Southern Hemisphere, almost invariably they talk about doing something with Australia. And Australia is, of course, a very great country. I love it there. I went to school there for a couple of years. I've lived there. I've invested there. And yet the fact is that there are more US dollar millionaires in Indonesia than there are people in Australia. And we just don't realize the scale of Indonesia. It is the most populous nation in the Southern Hemisphere, 250 million people. It's a quarter of a billion. And here's a very interesting comparison between China, which everyone thinks of as being the world's most dominant economy, or certainly the emerging one, and it's only a matter of time before the GDP of China surpasses that of America. But China has had a one-child per couple policy for over 60 years now, and they're realizing that that's causing problems because the population in China is graying at an alarming rate, and the population is going to shrink before long. Whereas in Indonesia, the population is very young. It's made up largely of people below the age of 30. There are, of course, millions of people who are in the elderly category, but as a proportion, it is a very young, vibrant population, all trying to get ahead and get jobs and earn money and make investments, unlike China, where there are a lot of aging people. So I personally believe that Indonesia is one of the strongest emerging economies on this planet, and most people just aren't taking notice of that.
Yeah. No, well, it's fascinating. Well, maybe if we've got a little bit of time, you can even tell us what's, like you said, in terms of what's happening on the ground. I think the context of this webinar, and there's a lot to go through this evening, a lot of questions that people are asking, so I really want to get straight into it. And, my first question really from your perspective, Dolf, is that, there's been a lot of disruption around the world when one considers Brexit, in the middle of last year, and then Donald Trump, being elected as president in November and ultimately becoming president in January, I think it was. And, we're not even through the 100 days yet, but obviously there's been a lot of talk in the market, what's happening. What has been your experience of what is happening on the ground? There's a couple of questions I have around it, but let's get started in terms of your experience, on the ground, both positive and negative, and what are the general Americans feeling? And sorry, just the one thing before I finish that question. I do understand that people overseas only really kind of get CNN's perspective, which quite frankly, when I'm in America, makes it look like a comedy show between CNN and some of the other news channels. So the reason for the question is just to kind of get the real life perspective versus the media's perspective.
Well, it's very difficult to give a perspective of what's actually happening because any one of us can only be in one place at one time. The reality of what's happening in America is that nothing much has changed. If you had a commercial tenant in a commercial building 3 months ago, unless their lease expired and they decided not to renew, then you've still got that tenant and they're paying the same amount of rent. The same goes for residential properties. I don't think much has changed at all. Even some of the travel bans that Trump has tried to instigate haven't managed to get through yet. I understand one might be going through on Thursday, but who knows? So nothing has changed. What has changed is on a psychological level, the perception of what's happening. There's a lot more uncertainty, and I suspect that even a lot of Trump supporters are now sort of wondering what on earth is going on. And you only have to look at the litany of fake news and half-truths and untruths that are spouted out and never owned up to or apologized for. So I think there's a lot of mental turmoil, and people are wondering what on earth is going to happen. But my personal view on this, Scott, is that we've had all kinds of crises before. We've had the assassinations of presidents. We've had the Cuban Missile Crisis, which is fading into distant memory now. But this was a major standoff between essentially Russia and one of its puppets at the time, Cuba, and the United States. And one's got to remember that Cuba is only 90 miles as the crow flies from Florida. So we've had that crisis. We've had all kinds of other crises. And yet the value of real estate in the United States has kept on creeping up at a long-term average of about 9.7%. And so my view on this is no matter what happens, even if Trump goes through and puts in atrocious policies, he'll either be out in 4 or 8 years, and the world will continue, the sun will continue to rise in the east, and it will set in the west, and property values will have increased. And those people who today are waiting for the perfect time to invest will at some stage in the future regret that they didn't invest today, just like those who invested today kind of wish they'd invested yesterday. So in that sense, nothing is changing, Scott. It's just everyone's talking about it. And I find it amusing that you get people whose entire careers are consumed with writing about the current state of politics, whereas some of us just go and buy another property, and we know that in 2, 3, 4 years' time we'll have done very well out of it. Even if you bought just before the GFC, the major crash where in some cities prices came down by 30%, heck, in places where I live, like some of the suburbs of Phoenix, prices came down by 60%. And of course, back then, everyone was saying to me with a very snide attitude, well, I bet you're not as bullish about real estate now, are you, buddy? And you know what? If you manage not to sell, which I managed, then today prices are higher than they were at the previous peak, let alone what they had at the trough. So it's, it's one of these things where once you gain a few years under your belt, which is a very unfortunate thing for anyone to realize, but it's better than the alternative. Once that happens, you realize that you've seen a few cycles, and these cycles come and go. They go up and they go down. There's a long-term average, and then the cycles are such that the current market goes above that average. It overshoots, if you like, and then everyone thinks, ooh, the market's too hot, and they all pull out, and they get overzealous in pulling out, and the market undershoots, and then the reverse happens. So if you can just keep a cool head and not worry about it, and not be like a commodities trader or a futures trader or an options trader, Scott, who's sitting behind a screen and watching things go up and down, buy, sell, and they turn themselves into a frenzied piece of a nightmarish wreck, which is why they're all burnt out by the age of 35. Whereas the property investor can just buy a property, put the title to it in a bottom drawer, take a 2-year cruise if he wants, and chances are when he gets back, the value of the property will be higher than when he bought it. And in addition to that, he's been collecting rent all along and getting all these tax breaks. It's like, how many advantages do you need before you say, you know what, this is a good idea no matter who is president?
So, I mean, just from your perspective, I got back less than a week ago from America, and while I was there, the job indices are looking a lot more positive. There's kind of economic growth, and on the back of that, they actually put up interest rates. What is your kind of take on? They put them up by 25 basis points, is my understanding. What's your kind of take on what's happening on the ground in terms of the American economy, and again, whether Trump's had any influence on that or not, but in terms of sentiment, etc.
Well, there is a general sentiment, and the market's already showing this. That's why the share market or stock market has gone so high. There's the expectation that the Trump presidency will be good for business in general and good for real estate investing in particular. And it makes sense. I mean, at the end of the day, Trump is first and foremost a property investor, so it's very difficult to imagine him enacting rules and laws which are going to be detrimental to property investors. So that's at one level where, yes, I think there's going to be a general increase in optimism. But we don't know what's going to happen, Scott. If he does other things which cause a major economic catastrophe, and, the jury is out on what the effect will be on his pulling out of all these trade agreements. It's very interesting being here in Asia at the moment, because in America it is touted that we don't need TPP and we don't need NAFTA, and we're going to pull out of this and we're going to pull out of that, and yes, make Germany pay more for their NATO involvement. Whereas in actual fact, when you read the stats, they don't owe any money at all. So that was sort of a mistruth that was spoken, or a non-truth, or however you want to call it. There are many changes going on in the world. For instance, as a result of America pulling out of all these trade pacts, they believe that helped precipitate the king of Saudi Arabia coming to this part of the world. He spent many weeks in Malaysia and Japan, and now here in Indonesia, and he didn't come with just an entourage of 2 or 3 people. He had an entourage of 1,500 people. And they think that all these relationships between the Middle East and Asia are being fostered because Trump is pulling out of all these international agreements. So it could change the power play in the world. It could change the geopolitics of what's going on. But as I said before, at the end of the day, it doesn't really matter. Yes, there are more jobs right now in America. That's good. That might indicate that more people have the money to buy a house. On the other hand, millennials, the new generations coming through, they have a lower propensity to want to buy a house. They don't want to buy a car. They don't want to own a car. Many of the millennials are not even getting a driver's license. They have no need for one. And they're probably right, because before long, all cars are going to be driverless, which means we can all text without causing accidents. Interest rates are going up, you said. That might be bad for property investors because it's going to be more difficult to afford a loan. On the other hand, you could twist that around and saying it's going to be more difficult for our competition because those with a worse FICO score or worse credit rating, if you like, are going to find it harder to get a mortgage. So they'll drop out of the competition to buy an investment property, which means the price will come down and make more of them available to us who have good credit. So it's hard to know which way it's going to go. But again, at the end of the day, it doesn't matter whether interest rates go up a bit or down a bit, whether demand as a result of that goes up or down. If we buy now, in 10 years' time, we only will wish that we'd bought more rather than not participated.
Yeah, no, look, I do tend to agree with you. So, guys, while Dolf is giving you, his thoughts on the market, I've obviously been asking some polls, which I've got up. So for those of you who want to interact and be involved and kind of give your opinion, it's always more interesting to be able to get involved. And equally, if you've got questions, please fire away. These are just some questions that I prepared, but if others have questions, then please ask them. So just in terms of, my uncle taught me a long time ago, Dolf, that it's always best to work out what the worst case scenario is. And if you can manage what the worst case scenario is, then everything else is upside. So when you talk about, be it Trump, be it the American economy, and possibly even the global economy, where do you see the risks at the moment? What should people be aware of? What should I be looking out for and kind of everyone else?
Well, without being facetious, a big risk today is that North Korea will fire a nuclear-tipped missile to the United States. But if you subscribe to the possibility of that happening and the likelihood of that happening, then you should invest in a country that's very unlikely to be at the receiving end of such a missile, maybe Iceland or Bolivia or Peru or something like that. But those countries have their own problems. Peru's just had major flooding, if you've been watching the news, and they tend to have quite severe earthquakes. And Bolivia also has some challenges, stagnant economic growth, and I forget the other country I mentioned, but it doesn't matter. Every place has a challenge. I don't think that America is going to be attacked in the near future by North Korea, so that is not a realistic worry for me. There is a risk that there's rampant inflation, but remember, inflation generally benefits the real estate investor. Few people realize that. If you've got $1 million property that you bought with 100,000 cash and a 900,000 mortgage, and through inflation, the value of that property goes to 2 million, what it really means is the value of the building hasn't changed, but the value of currency has halved, so that instead of being able to afford that building with 1 million units of currency, you now need 2 million units of currency. But even so, if the value of the building has gone to 2 million, your mortgage is still only 900,000, assuming you've been paying interest only. And it's true that what you can buy with 2 million is only about half of what you could have bought with 1 million before inflation took its bite. But you've still generated 1 million in equity out of thin air. So it's inflation isn't even something that overly bothers me. Inflation can be our friend. So it's just a matter of you've got to decide, do you want to invest or not? And if you do, you've got to decide, what do you want to invest in? And, I've written books and spent weeks debating in a friendly manner with proponents of other forms of investment what we should invest in. And there's one thing I wish I'd done when I had these debates a few decades ago, and that is just say, well, let's all write down where we're at now, and when we come back in a couple of decades' time, let's compare everyone's results and see how we fared. Because, Scott, when I set out to buy one house a week for an entire year in Vegas, and we actually did it in 9.5 months, a bit over a normal human gestation period. So we bought 52 homes in under 52 weeks, and we did it all without using any of our own cash. That's a significant point. You can do this without having to come up with the cash. And by the way, each of these properties individually, and certainly, of course, as a group, were cash flow positive. You can create wealth out of nothing with real estate, which it's almost impossible to do with an investment, say, in the share market or with options and futures and certificates of deposit and treasury bills. You actually have to come up with the cash to do those. So I don't want to be facetious, Scott, in answering this question, but the biggest risk in real estate is the risk of doing nothing, because that's when you actually won't make any progress. You'll just be standing still. And in fact, through the ravages of inflation, under these circumstances, it will actually work against you. And whatever cash you've got in the bank, it's going to be, debased and eroded away by inflation, which is probably going to be higher than the pittance of an interest rate you can earn by putting your money in the bank. So the biggest risk is you have to do something. There's a risk of investing in the wrong city. We've got cities in the United States where there were steel mills, and the steel mills have gone out of production. And we've even had coal mines, and the coal mines have gone out of production. And some of the people who voted Trump in, I understand, are people in erstwhile coal mining towns who were promised that they'll bring the jobs back and reopen the mines. And I'm not sure if that's going to happen, because it's not just a matter of reopening a mine. You've actually got to have a demand for the product that you're mining. So the risk is in investing in the wrong city. But, you can do the studies on your own. It is one of the tenets I always come back to, Scott. It is so easy to beat the average in real estate. We've often said that the average long-term capital growth in the United States tends to be 9.7%. But that's on average. That includes North Dakota, where for a little while there was a flurry of interest there when they thought they were going to get oil there again, but the oil craze has kind of gone from there. There's nothing in North Dakota except for extremely cold temperatures. So it's got a lower than average population growth and a lower than average capital growth of real estate values in the United States. And yet there are other cities, like many cities in California, and Phoenix is certainly one of them, and Las Vegas, which have a higher than average growth of population and therefore also growth in capital value of real estate. So just by picking the right real estate, the right region, the right cities, you can beat the average with confidence and certainty. And unlike our share market aficionados who are looking at the screen, looking at things going up and down and making sure that they make the right decision, buy, sell, and burning themselves out by the age of 35. You don't have to do that with real estate. These trends tend to be long-term. Phoenix has been the fastest growing city in the United States for about 50 years straight. These trends, it probably will change, but it's going to change slowly, and we'll get lots of warning. So the biggest risk is buying perhaps in the wrong city. It's perhaps getting the wrong kind of finance, not thinking it through, or buying into this idea that you've got to pay your mortgage off in 5 years. I don't understand this obsession with paying your mortgage off quickly, when what most people do once they've paid it off is they go back to the bank and refinance a new one. Get an interest-only loan if you can. Inflation will make the value of that loan insignificant. And if I've got a mortgage for $1 million, Scott, rather than pay it off in 5 years, if I did get 5 million? I forget. If I did get 5 million to pay it off, I'd rather use that as a down payment on more property. So it's, the risk is in making not smart decisions. But here's the interesting thing. You don't have to make all these decisions on your own. You can team up with people who've perhaps had a bit more experience in it than you have, and let them help you make decisions, which is a euphemism for just let them make the decisions and you get a free ride. It's like, when I go to a restaurant, I don't go into the kitchen to tell the chef how to do his job. He's way more experienced than I am, particularly at those particular dishes, so I let him do his thing. That's how it works. But there are some people who insist on sticking their nose in everything and making sure they run it all and control it all, and that's why their lives are usually pretty miserable.
Yeah. So, just a couple of questions here, Dolf, is that Brian said, where do you see the state of property prices currently in terms of peaks and troughs? I'll bring up that economist data while we're talking, but equally there was another question here from George around the printing of money and, just the US debt. and your kind of thoughts on that. I'll bring up that slide on the different property prices and troughs while we talk.
Well, again, I'm happy to give my comments on it, but they've got to be taken in the right context. Firstly, guys, despite all the wonderful accolades that Scott, you gave me, I know no better than the next person whether prices are at a peak or at a low, and whether they're going to go up further or go down. All I can tell you is what I do. I always vote with my money. I always put my money where my mouth is. There are many advisors and so-called gurus in this real estate game who will tell you what to do, and they make their money by telling you what to do. Whereas I make my money by investing in real estate, and I just happen to share how I do it. And on that basis, I'm continuing to invest right now, because even if there is a downturn, even if the current government causes a bit of a disruption in the normal economic growth that we'd all like, it won't matter. In 10 years' time, we'll all, I believe, be better off for having invested than if we stood by the sidelines waiting for the perfect moment. So I think there's still movement left in property prices. Of course, that opinion is at odds with some of the great pundits, and some of them are my sort of friends. Harry Dent is one. I befriended him, gosh, I think it's nearly 10 years ago. We used to shoot videos together. I respect his opinion very much, and that doesn't mean to say I have to agree with every word he utters. And he's one of many people who's saying that there's going to be an enormous downturn, 40, 50, 60% maybe, coming up. I don't think that's going to happen. I think we had a pretty good cleaning out last time, and if prices are a bit over the top, there might be a correction. That means there are going to be lots of opportunities for people like us, and if it doesn't happen, well, life will keep going on. Here's the thing. Real estate is one of those funny aspects where people have to live somewhere. They're going to live in houses or rent houses, and if they buy houses to live in, that's going to help keep prices high. And if they decide to rent, or they're forced to rent, then they're potential tenants for us. So I don't see it as a big downturn either way. But let's look at these statistics. I'm looking at the numbers here myself.
Yeah, so hopefully you should be able to see. So this is the Economist's research, and for those of you who've kind of seen or heard from us before, we've showed this. So it's the best place I can find in the world, where they put in all the different research from as far back as possible for all the top markets. So you can have any of the countries on the right. For now, I'm just going to kind of keep it simple and keep it Australia, England, South Africa, and America. And you can see the house price growth here. So you can see the US, then you can see Australia, then the UK, then South Africa. So on the face of it, South Africa looks like it's done a lot better than anyone else. Price in real terms is once you take into account inflation, and you can actually see here that you've got now South Africa on the other side of the curve, and then America here. So I think it was Brian asked that question. There's the peak of 2008, 2009, and this is where US prices are at the moment. Then you can see Australia and then the UK in terms of where prices are. Just price against, just jump in, Dolf, if there's anything you want to add, but I just wanted to kind of show people where these stats were. So again, the American house prices are here's where the trough was, but it's still actually sitting behind below the long-term averages. You can see here South Africa, and then you can see Britain and Australia, and then price against rents, which is what I've learned. One of the most important things is that property, whether it's residential or commercial, should be valued against income. And you can kind of see again America blue, South Africa pink. England is green, and Australia is the light blue. And then lastly is the percentage change in terms of where the property market is. So I don't know, Dolf, is there anything you want to comment on that before I just move? Because I wanted to also just show the other one, which is American cities. Now, I've got all the research, and if people want the research, I can give it to them afterwards. But we've also got this for Australia, we've got this for England in terms of where the breakdown is. But I'm not sure if there's anything you want to comment on just before I move on.
No, I just think it's very interesting that prices are at historical lows in terms of, the price relative to rental income, and prices relative to average income of people's salaries. So on that basis, there's a lot of growth left to reach their historical averages. On the other hand, there might be something that happens under the current government that's going to cause a major downturn. But even if that were to happen, that would mean that these averages, prices against rents and prices against income, are going to go down further, which means there's time for a correction. You know, I think we could spend too much time trying to figure out what is the optimal time. We have an expression for it. You've all heard of it. You may not think of it in this context, but it's called paralysis through analysis, where we try and outsmart the market. No one can outsmart the market. But the best thing you can do is be a participant in the market, you know, unless you're in a game where there's a long-term loss. Like, listen, guys, to me, here's a situation. Think of gambling in a casino. And I've just made this up, guys. This isn't a talking point you'll ever have heard me talk about before. Think of gambling in a casino. It's well known that the house always has an advantage. There's only one game where the house may not have an advantage, and that is blackjack, and only under certain conditions. But if you take every other game, craps and roulette, and there are very fixed mathematical percentages where the house must win. In other words, if you play roulette long enough, over and over and over again, statistically, on average, you will lose 2.14% of the time. That's in Europe, where they only have a green zero, and in America, where they have a green zero and a green double zero. If you don't know what that means, don't worry about it. You lose 5.whatever% of the time. So if someone keeps on playing year in, year out, even though they might come home and report to their spouse or their buddies, oh, I won big time last night, we know that the long-term statistical average is for them to lose money, and the long-term statistical average is for the casinos to make money. It is set up that way. And yet when it comes to real estate, I believe the long-term average, I stress average, because everyone can quote examples of people who maybe were very rich and they lost it all through real estate. But the average is that people do well. So the more days you spend in a casino gambling, the greater the chance that you lose money. And the more days that you spend in the real estate market with a bit of common sense, trying to pick markets that have higher than average growth and where you cater maybe to the elderly or do whatever else as a very sound long-term theory, the chances are the longer you're in that market, the better off you'll be.
So, I mean, just on that basis, Dolf, if you look here, just taking America, you can see the light blue is Dallas, then the green is Atlanta, then the next one is Phoenix. You mentioned Phoenix, and then the one above that, the light green, is the United States average. And then I thought I'd just put in New York and San Francisco, because a lot of people around the world get excited by those two markets. So you can see the house price growth here since 1981. You can see the prices in real terms. So again, you know, the markets that we were talking about, Atlanta, Dallas, Phoenix, are all actually sitting kind of in equilibrium at the moment, well below where New York and San Francisco are. Price to income. So again, both Atlanta and Dallas are sitting here, and you can see Phoenix is a little bit higher there, but just in terms of price to income, and then obviously San Francisco and New York, price to rent. So this is really important. You know, you can see here in terms of the prices to rent and the different property markets. And then lastly, just the percentage change. So again, I mean, we talk about this all night, but, you know, we tend to not, you know, make decisions based on gut feel. And it's something I learned from you many, many years ago. And I know Henning talks about it a lot, how you taught him how population growth is such an important thing. And, you know, in Texas, as an example, there's tremendous population growth, and property prices are actually below on average. And, you know, it's one of the reasons that we've, you know, been investing in Texas, as an example. And I don't know if you want to speak a little bit about that, because it really kind of brings it on to the opportunities side. And I just want to make sure, can you all see my screen here, where you see the question number 3, and it says opportunities. And maybe, Dolf, you could talk a little bit around just some of the major metrics you look for, like population growth, that really point towards where the opportunities are that people should be focusing on. You mentioned Phoenix and the growth in Phoenix over the last 50 years.
Yes, one of the strong ones is, as you've mentioned, population growth. We also look for regulations. We want an absence of regulations. I'll give you an example. In Japan and Thailand, for instance, if we wanted to invest there, we couldn't own a building 100% outright. We would need a local partner who would own 51%. If you want to invest in Australia as a foreign investor, you can only buy new stock. You cannot buy a second-hand home. They have all these funny regulations that tends to distort the market. We look for longevity of mortgages. Can you get a long-term mortgage? In the United States, you can get mortgages for 40 years with the interest rate fixed. Now, in New Zealand, it's liberalized a bit, but when I was still living there some 20 years ago, you couldn't get an interest-only loan for more than 1 year, and if you were really lucky, 18 months. Whereas here, you can get interest only for 10 years, and then it converts to a fixed interest 30-year mortgage. So it's what's the quality of borrowing like? There are all these indicators. There's no matrix where they have to meet a minimum criteria, but if you put them in a heuristic pattern, you can figure out that this city is likely to go ahead. Another one we look at is tax breaks, which really speaks to Texas that you talk about. Texas not only has an absence of many of the taxes that other states have, but they are right now providing tax incentives for developers to develop buildings. So if you build a fancy building, you might get a property tax waiver for the next 10 years. And this has helped influence some of the biggest companies in the States to relocate in Texas. FedEx, for instance, has relocated into Texas. Toyota has moved its U.S. headquarters from California to Texas, and they're bringing 10,000 staff with them. Do you think that's going to boost the economy of Texas? Of course it is. They're also bringing their finance division there with another 8,000 staff. The numbers are staggering. I forget all the names of them. Scott, you might remember some of them too. I think it's Morgan Stanley or one of those big financial powerhouses.
JP Morgan, I think it's JP Morgan is bringing in. There's a lot of big banks that are coming in. There's massive medical companies coming into Texas because they've put that cap on medical, what's it called, where you can get sued up to, but it can only go to $1 million. So a lot of the big medical firms are moving there because of they're making it a lot more friendly from a getting sued perspective for medical mistakes.
Right. So for all those reasons, holy smokes, Texas is just booming. And it's one of those things, guys, you really have to go there to have a look to get an understanding of it. I used to teach in Denton. I used to be a professor of real estate at UNT, the University of North Texas, which is about 30 miles northwest of Dallas itself. And I had a home there, and I used to have a car there. I called it the Texas Lexus, and I'd commute in and teach there. And so I'd drive that route. It's known as the State Route 35 from Denton to Dallas, mainly to Dallas-Fort Worth, regularly. And then I had a break of about 6 or 7 years, and I went back recently, and that whole place has filled out with houses and subdivisions and car lots and you name it. In fact, I think it was Honda or one of the major Japanese manufacturers had not one major car lot there, but 2 major car lots there. And guys, these auto companies spend millions of dollars a year figuring out where to put their showrooms and their distribution centers, and it's all based on population growth. So the fact that every major car manufacturer was represented on that strip of the 35 just goes to show that the population is exploding there at a very high rate. And it's one of those things. I don't regret the properties I bought in Texas. I kind of do regret that I didn't buy more. And I know you're all thinking, well, you don't need any more. Maybe that's true. But it just highlights the fact that despite all the economic uncertainty we've had since I was teaching there, despite the changes of governments and all their policies and all the scandals we've had and all the wars we've had, it was still good to be a property investor. And I believe the same thing's going to happen going forward. Mainly, guys, because as a nation, we have an increasing population. Right now, we've got a surplus of births over deaths. It's not that much. Our birth rate is not only low, but it's declining. But more particularly, we have a massive surplus of immigrants over immigrants. Of course, even that could be changing with some of Trump's policies because he's getting tough on some of these undocumented, as they're called, immigrants. But I don't think that's going to change the dynamics all that much, because you've got to understand too, developers modify how much they build depending on the immediate demand that they perceive there. And we're looking at national stats. You can still find places like Texas, like we've just highlighted, where there is a massive increase in population through domestic immigration, people moving to Texas from other states, because if you lived in North Dakota and are trying to raise a family there, why would you stay there if you've been out of work for 3 years and you freeze your butt off every winter because it's 30 degrees below, when you could move to Texas and get a job with Toyota or JP Morgan or FedEx or any of the 200 other companies that are relocating there and not be that cold in the winter? I mean, that's how it works. That's why people, now that we're all more mobile, they are moving to these places.
Tell me something, Dolph, in terms of, you work closely with Henny and Michiel and Willie and a number of the other people that are kind of on the investment committee and driving kind of long-term trends. I know that you and Henny have been talking for years. Obviously, Henny's an expert in medical, and equally, you've kind of really kind of explained to people, outside of America that don't understand multifamily. Explain to me the real kind of focus in terms of where the institutionals are looking in both the medical field. Why is medical so popular in the first world? And equally, why has multifamily become so popular since the crash in 2008, 2009? Why are those two sectors specific sectors that are really well worth understanding?
Well, gosh, Scott, they're short questions, but they can have long answers. We could literally spend a day talking about why medical has become so important, but I'll try and summarize it very briefly. It's from two perspectives. One is the tenant perspective, and one is the tenant's client's perspective. We have an aging population in most of the Western world. I mentioned Indonesia, perhaps, and Vietnam, and Laos and Cambodia as being exceptions to that. But in most of the established West, the population is graying, and whether you like it or not, as people get older, they tend to need medical services more and more often. So there's an increasing demand for medical services beyond the increase in population. That's point number one. That means if you get a building that's a medical building, chances are it will have a higher occupancy rate and a greater stability of tenants than if it's just the average commercial building. Now, what kind of tenants are there? The way medical practices work is they tend not to want to relocate very often, again, for two reasons. One of them is they often have a lot of equipment installed on the premises. It might be an X-ray machine. They're not small things that you can take in a little lunchbox and relocate. They tend to be big, complex machines that have very sensitive electronics, so even if you could move them without too much hassle, just recalibrating them and getting them installed in a new place is bad. So they have all this equipment that they have to install. They've got air supply, and it's not just any air like an air hose in a car repair shop. It's usually filtered air that's absolutely scrubbed clean with HBIA, whatever filters, HEPA filters, HEPA filters. And they've got oxygen supplies, and they've got electricity that's been cleaned up and scrubbed so that it's a pure sine wave, etc., etc. The cost of relocating is huge. The second reason why medical tenants tend not to want to leave is they build up a lot of goodwill. There are clients, old geriatric patients, they wouldn't know the name of the street or the name of the company perhaps, but they know that if they've got a sore knee, they drive, 3 blocks to the left and they turn at that tree and they know how to get there. So these medical practitioners feel they'd lose a significant chunk of their business if they kept changing location every 2 or 3 years. So they provide extraordinarily stable tenants. Often the license that goes with that medical practice goes with the building rather than with the practitioners. That's why often when medical practitioners of any variety, any flavor, retire, they tend to sell their practice because the licenses for the operation of that business goes with the premises. So for all those reasons, Scott, it just makes an extraordinarily stable tenant relationship. They tend to be there for the long haul. And they also tend to be relatively high income earners compared with, say, a hairdressing salon where often it's marginal, or more particularly a restaurant which might launch and be very popular and they're raking in the money and they can afford the rent. But then the restaurant across the road becomes popular, patronage turns down, and suddenly they're struggling to survive. And do you kick them out and maybe have the premises vacant for 6 months, or do you retain them? So for all those reasons, I prefer medical tenants to just about any other kind. I used to like lawyers as tenants too because they knew the law, but I actually had a real estate lawyer who did a runner on me literally in the middle of the night. So that colored my attitude to that a bit. But no, they provide extremely stable tenants for all the reasons I mentioned. And then why apartment buildings have become popular is, I mentioned before that the millennials tend not to want to own properties as much as their parents' generation did. And so when millennials are looking for somewhat more itinerant accommodation, they don't want a 5-bedroom, 4-bathroom home. They tend to want an apartment inside an apartment complex. There's no lawn to worry about. It's easy to keep clean and tidy. They can move around when they leave it. They've completed their 6-month stint or whatever. They move on. And I think they're becoming very popular as well. I don't personally particularly like either living in an apartment, and I'm personally not the biggest fan of investing in them. Given a choice between a medical building and an apartment, I'd probably choose the medical building. But there is a big demand, both from a tenant point of view and an investor point of view, in investing in multifamily or apartment complexes. And it's understandable why. In 1 acre of land, you might have 400 units with a very good management operation, which means the cash flow is very good. So cash flow tends to be very strong for these buildings too, if they're well managed. And I'd stress that management is a very important component in figuring out how well an apartment complex is running.
I think, Dolph, just to that point, Henny and I started trying to buy multifamily complexes back in 2012 in Florida. And although we found some good deals, we could never find a good partner on the ground. And I think you've hit the nail right on the head. It's only as good as the people you've got on the ground that can actually execute on the property, run the building well, maintain the building well, collect the rent, keep the tenants happy, et cetera, et cetera, et cetera. And
Right.
it's taken us 4 years. There's been tremendous demand from the big institutions to invest in multifamily because of the cash flow component that you mentioned. And because of that, it's been very hard to find opportunities at good value. And that was until we actually came across the PPA group in Texas. That is an Inc. 500 company. Monty and his team are a young, dynamic team that they manage thousands of units. And I actually personally was so impressed by them that I personally invested my money in one of the multifamilies that they were doing. And my point being is that I completely agree with you. It came down to their skill set that I was impressed with. So again, it wasn't so much about the property, but more about the people who are actually going to execute on the opportunity.
Right, right.
Just in terms of another question here, and it does really come to tie in with what we just discussed. I know that you've run like entire courses on this, but just a kind of a brief synopsis of your idea between residential and commercial.
Um, when you are starting out as a real estate investor, I would say start with residential. You'll understand it. You'll know what to look for when you're looking at a property. If you come across a house and there's no front door or there's no roof or there's no kitchen, you'll tend to notice that. But most people, when they're starting out in property, when they look at a commercial building, they have no idea what to look for to see if it's missing. Obviously, if there's no front door, they'll notice that, but they won't know, they won't understand what a commercial tenant perhaps needs. So by all means, get started in residential. But once you've got a few under your belt, I mean, for me, I almost don't want to spend any time looking at residential properties. The investment is so small, and commercial has many advantages. I can rattle through a few of them very quickly. Commercial tenants tend to want to have long-term leases, way longer than residential tenants. Residential tenants tend to want a short-term lease just to keep flexibility. Whereas the most frequent call I get from a commercial tenant is, Dolph, may I please get an extension on the lease? And I'll look it up and I'll say, but you've still got 4 years to run on the lease. And they say, yes. So anyway, getting back to the question, may I please get an extension on the lease? And I'll say, why? And maybe I should ask you guys, why is that? Well, it's quite simple. Part of the goodwill of a commercial operation is the address. So even if they want to sell their business, if they only had 3 months left to run on the lease, they wouldn't get as good a sale price for it as when there is 5 years and 3 months left to run on the lease. So that's number one, longer term leases. Secondly, commercial tenants earn their income there. They have a vested interest in keeping the place looking good. So they'll tend to paint it and spruce it up and do all kinds of things to make it look good. Sometimes they'll ask you to renovate something, and you might agree to do it. And other times they have to pay for it themselves. That is sort of standard practice. But if they do ask you to pay for it, they will pay a percentage of the cost of renovation as extra rental. So they'll ask you to spend $100,000 to do something up, but they'll pay you an extra $8,000 a year. That's a good deal. Here's one of the biggest kickers. Commercial tenants almost universally around the world tend to pay the property taxes, the insurance, and the maintenance in addition to their rent. That's what's known as a triple net lease. The rental they pay under a triple net lease is net of the property taxes, insurance, and maintenance, which they pay in addition to their rent. That's why I think virtually all of my commercial tenants pay me not one payment a month, but two. One is for the rent, and the other one is for the proportion per month of those annual costs, property taxes, insurance, and maintenance. That makes it very sweet. there are only two advantages of commercial property as an investor. One is that banks tend to lend a lower loan-to-value ratio, a lower percentage of the purchase price on commercial loans. And secondly, as most people fear, if you have a vacant commercial building, it might be vacant for a while. Whereas if you've got a vacant house, there's only one problem. It's not the color of the paint or the carpet. It is the fact that the rent's too high. Drop it by 5%, you would probably get a tenant. But we probably don't have time to go into it now. But if you can overcome those two disadvantages, a lower LVR or LTV, whichever country you're from, and the fact that it can be hard to get a tenant, if we've got ways of overcoming that, then I think you'll have to agree that commercial property has got all the advantages. And we do have ways of overcoming those two things. In fact, I've made most of my money specifically by overcoming those two challenges.
So, Dolf, I was just looking in my behind me here because I've got my whole book stand behind me, and I know I've got your book on commercial property. And I think the saying that comes to mind, which I've loved, learning from you, is really, if you want to go fast, go alone. If you want to go far, go together. And, I was that same person. I owned a lot of residential property in South Africa, Australia, England, and America. But I was really struggling to get into commercial for the two reasons you've mentioned. The first one was the loan-to-value ratios and having enough cash to be able to do it. And secondly, quite frankly, not actually knowing what to do and being quite concerned that if I made a mistake, you're kind of stuck in the deal for a huge amount of time. And it's been fascinating for me over the last 4 to 5 years with the likes of yourself and Henny Besaidnout and Peter Fenstra and Alan Kynock and others who have got significant experience. And I'll never forget that day when I was sitting at that first investment committee, meeting where it was you were in the room and Alan Kynock was in the room and Henny was in the room. We were buying that medical building in Atlanta. It was about a $16 million portfolio with 7 buildings. And the three of you just asking all these questions. And I learned more about commercial property in those 2 hours than I think I've ever learned in my life in any other learning environment. And quite frankly, I really wish we had recorded that because I think it was the best 2 hours of learning that you could ever get in commercial property. I'll never forget how you guys shaved off $1 million off the purchase price with the tenant installations, just by knowing even what TI stood for and how it all works. And then secondly, by negotiating the price, because the seller was trying to sell us the building based on a cap rate as if the building was full, and yet the building was only, I think, 87% occupied, which again brought down the price. And yet we were able, and I remember with your help there, you were able to point out how we could fill the building up. And we actually filled the building up before we actually took transfer. So we actually won twice in that same deal. I'm not sure if you had any comments around that, but I mean, that was my personal experience. It was the first commercial deal I got involved in, and I've been investing with you guys ever since because, quite frankly, if you guys are helping me learn that stuff, I'm learning faster than any other way to be able to do it.
Well, that's kind of all fun to hear because it's all in a day's work, and that's exactly how it's done. Most people don't understand it for some bizarre reason. In the United States, commercial properties are sold on a pro forma basis, not on a rental income divided by cap rate basis, which is very odd. But when you point out the absurdity to them and make an offer and they haven't had another offer that day, often they'll accept it. And you're right, Scott, we shaved $1 million off that day. And how many houses do you have to buy and renovate and manage for a year or two and then sell and pay capital gains tax to make $1 million? And here we did it, during a 2-hour investment committee meeting or whatever it was. That's where the magic is made. And after a while, it becomes a sport and a hobby. And some people like angling and pulling a fish out of the water. It's not my favorite thing to do. I feel a bit sorry for the fish, but that probably means I'm a bit weak or something. I don't like elephant hunting. But I love hunting for properties and finding a great deal that anyone else on this planet could have found and negotiated. But they didn't because they're too busy watching TV or arguing over some score of a game or fighting over something else. It just seems bizarre. There's so much fun to be had doing this. And it's lucrative. So why would you not do it? Why would you not learn a bit more about it? Why don't schools teach more about it? It frustrates me that I spent 15 or however many years at school and not 1 hour was devoted on how to make ourselves financially free. At best, we were taught skills that we could later swap for a few bucks or euros or rand per hour on the assumption that would work for someone else. And I just wish that they'd help us become financially free. And that's why part of my passion is just to share that, to share the message. And the fact that it's relatively easy to do if you're willing to invest a little bit of time to figure out how to do it. And that's why I want to acknowledge all our listeners, because the fact that they're giving up probably dinner time or driving time or homework time with kids to listen to this in the hope that we give them some gems, I commend you for being on this call. But having said that, Scott, we probably should keep the momentum going to give them useful information, or they'll go back to dinner and homework or whatever else.
No, 100%. So a couple of rapid fire questions here that I want to run through. Just quickly, George asked, what's an EB5? EB5 is a way to invest in America $500,000 and get a green card. If you want more information on that, just type in EB5 and someone can get back to you. Dolf, I wanted to ask you quickly your, kind of one-line thoughts on what is the biggest challenge in real estate globally? What challenge do most people face when it comes to real estate?
The biggest challenge or change? I see change on the screen and challenge.
Good point.
Challenge. The biggest challenge is a shortfall of information. They don't go to the bother to learn it. That they're willing to spend 3 years to get some useless bachelor's degree in some obscure arts that they'll never use because no one's interested in it. They'll devote 3 years of their life learning that, but they won't devote 3 days figuring out something about real estate to make a very smart investment decision. So that's the biggest challenge people face. The biggest change in real estate, there are some technological changes. The change towards making homes smart is very big. The change in insulating properties, it's also very big. But the biggest change that I see is more and more people are going global. It's becoming the norm. It used to be, 20 years ago to even travel to another country. 20 years ago to come to Indonesia was like, why would you do it? And now it's almost become the norm, especially amongst the young people. They'll go to Bali or Switzerland or whatever, just for the heck of it. And so it's becoming more global. The challenge is to keep up with that, or you'll be left behind.
Talk to us a little bit about that technology and how that's changing things. I mean, you've been investing internationally for, well, many, many decades. You also, 20 years ago, pretty much created Reap and Ream and, to be able to use technology to facilitate it and make it easier. How do you see this changing things? I mean, I know there's big changes in America, but equally around the world.
Well, just on insulating materials, we've got products now that you can add to paint that will reflect 98% of the heat on a building, which reduces the heat load on a building, which means that you don't need to spend as much on electricity to cool the building through HVAC equipment or air conditioning plants. We've got additives you add to the refrigerant of an air conditioner, 5% by volume of the refrigerant, but it reduces electricity consumption by 14%. And there are all kinds of technical reasons why that is. And these things compound each other, by the way. If you put the paint on the building and you have a more efficient AC plant, then your electricity consumption goes down even further. And because the duty cycle of the equipment is less, it means instead of lasting 8 years, it now lasts 12 years. So that's just one silly little example of how technology is changing things. In America, most window frames are made of aluminium, or as they call it, aluminum, whereas that is not very heat efficient in either cold climates or hot climates. The Germans for lifetimes have been making wooden frames, which are far more insulative. You've got nitrogen in between the panes of double or triple glazed windows. That's really efficient. It's just the whole industry is changing, and it's very slow on the one hand. You could spend a year or two and not notice much changing, but when you look as the decades roll by, it's quite significant. And in the commercial space as well, we're getting great traction by getting rid of locks with keys because people lose them all the time, or they fire staff, but then they've still got access, and give them all electronic access. It's so simple now. It's the norm. Fingerprint access, card reader. You want to have access controlled by something you know and something you have and something you are. So something you know could be a password, something you have could be a swipe card, and something you are could be a biometric indicator like a fingerprint or an iris scan or something. And you can have any one of those, you can have a combination. But it gives you all kinds of security that we just didn't have before. They're all game changers, each and every one on their own. And my thrill is in staying ahead of the game so that when we offer a commercial building for lease, we've got it decked out with the latest of the latest, most of which our potential tenants have never seen. And when they see that they can have that, they won't need a key bunch anymore. They'll never drive halfway to work and say, oh my gosh, I left my keys at home. and they can still get in, and no one else can get in, and the locks are bump-proof and pick-proof. Look, Scott, any one of these ideas on themselves, your listeners will say, well, that's not going to make a big difference. But when you do 50 things like this and you add them up, suddenly our buildings are way more appealing than the opposition's buildings. That's why I always say, find me an empty building. I'll find a tenant for it. We've got hundreds of ways of getting a tenant. But most people either don't believe it or think of it or don't ask you how to do it. It's like that shortfall at the medical buildings. We had 87% occupancy. We had it fully leased before we got there. And we had ideas, you may recall, for the vacant land next door, what we can do with it.
Well, we've still got options on that land. So I mean, that's a pretty good prelude into the next question, which it's a story I always love to share. But and ironically, you're in Indonesia now. But the way that you spent $20 and increased the value of a building by 2 million.
Yeah, when I mentioned this, people, especially the detractors, and you always get detractors in anything, you find them on the internet and in audiences, they say, all right, well, now you've gone too far. Turning $20 into 2 million overnight, that is really pathetically ridiculous. There's no way you can prove it. And the weird thing is when you explain how it's done, they'll try and find some other reason to fault it or to discredit it. But it's quite simple. Jakarta, as I've experienced again this week, guys, the traffic is more horrendous than any other city I've ever experienced. Way worse than Shanghai, Scott, or Beijing. It is phenomenal. They measure how long it takes to get somewhere, not in kilometers, but in hours. And, the journey from the airport can take 2 hours. It can take 4 hours. I've spent time in all kinds of fancy cars here, stretch Mercedes-Benz limos and whatnot. I don't think we've ever gone beyond first gear. You just don't go fast enough. So in that context, if you've got a commercial building and the directors of the companies in that building need to get to the airport and they've got a 2 p.m. flight, you can't go to the office in the morning because if it's 3 hours to get to the airport, what should be a 40-minute drive with no traffic, you just won't have time. So if you've got a 2 p.m. flight, you never turn up at the office. So how do we turn $20 into 2 million? Put your seatbelts on because it's going to be told before you realize it. We spent the $20 on a bucket of paint and a white brush, and we went onto the roof of a commercial building. It had about 10,000 square meters, so about 100,000 square, a relatively small commercial building, and we painted a big white circle and the letter H on it. And this flat concrete roof we turned into a helipad. Now, to be sure, we needed Civil Aviation Authority, which is the Indonesian equivalent of the FAA, approval to do this. But assuming you get all of that, we now could take a helicopter from this building to the airport in about 15 minutes flat. And the effect of that was that the value of our office space went up by about $20 a square meter, which is about $2 a foot. I forget what you guys operate in, but anyway, $2 a foot increase in rent times 100,000 square feet is an extra $200,000 a year. And when you cap that out at 10%, that's worth $2 million. If you don't know what it means to say cap that out, you've got to read a book on commercial real estate. It doesn't even have to be mine, but it's one of the 5 things you have to know to understand commercial real estate. It's not that complex. But that's literally how we turned $20 into 2 million overnight. And ironically, while I've been here in the last couple of days, I've been told that they've changed the laws on helicopters. It's now no longer sufficient to have a single rotor helicopter. You need a dual rotor, or one with 2 sets of blades on it, and for security so that they can't drop out of the sky as easily. So they will change the rules and update them. But all you have to do, guys, remember it's a game, is conform to the rules. If you don't want to conform to the rules, don't play in the sandbox. But these things are easy and they're fun, and it's a way of beating the competition. And even though I talk about this, Scott, and I write about it, I've written about it in my book on commercial real estate, courses, events, I hardly see anyone else emulating it. I still repeat this over and over again. And you may recall with our medical facility, the spare land there, I said one of the things we should do is spend the $20,000 going through council approval to get helipad landing rights there, because as a medical trauma facility, the value of it will go up. Even if it's never used, remember there's value in unused opportunity. So let's spend the money, get the extra rent.
So, I mean, look, guys, there's a couple of questions coming through that I've answered. One of the things I love in terms of where technology is going is in the past, I had to go, buy this book and read it, or the commercial book, or go on a course with Dolf. And now there's really the opportunity at a global level to not only kind of run to the back of the room and buy a course or buy a software, but actually to be able to participate and to co-invest and to learn while doing, which I think is one of the most valuable things. So I'm going to leave this poll up for a little bit. If anyone would like to, know more about that, we can actually, go into that in a bit more detail, which I think would be really, really valuable. It's certainly, the value I've had is immeasurable when, in terms of the time that spending time with Dolf and Henny and guys like Peter, etc. Learning, Tony Robbins always says, if you want to get wealthy, do what wealthy people are doing. And, I think that's one of the things that's really, really important. Dolf, there's been a couple of questions. How do you buy a property without any money? And equally, my question here was, how do you arrange financing anywhere in the world? Obviously, we as foreigners have had huge problems trying to arrange financing in America on the residential side, but on the commercial side, we've actually done it fairly easily with very low rates around kind of 3%, equally on the multifamily, etc. So what are your thoughts on how to kind of arrange financing and some of the tricks that you've used there?
Well, it's kind of funny, Scott, because you toss these two questions out as if they're almost incidental. How do you arrange financing? And what was the other one again?
One of the guys, George, I think, asked, you mentioned no money down.
Oh, yes, how you do no money down deals. And, they aren't one sentence answer things. You've got to explain a little bit about the system and how it works and why it's possible to not only buy deals with no money down, but how the sellers will actually beg you to take the properties off their hand, and they'll give you money to take the property off their hands. So, but it's not a one sentence answer. So, it's kind of tricky to just summarize it. And I don't want to be too facetious, but the best way to arrange financing all over the world is to become a lender and not a borrower. That's kind of a lot easier. But again, Scott, it has to do with partnerships. It is very difficult for a Bolivian to go to Cambodia and get a bank mortgage the same day. And it's difficult for someone from Laos to go to Finland and get a bank mortgage. And it's probably difficult for a South African to walk off the street and with a thick accent and still with his gumboots on, although you may not have gumboots in South Africa, or call them that, to get a mortgage that day. But when you partner with the right people, it all of a sudden becomes easy because we find the path of least resistance. So again, it's a call to action to say, yes, you can do it all yourself and be a hero in your own household, or you can team up with people. And it's not even as if it's going to cost you money, because what it does cost you, and whatever fees there might be, you're going to more than save in economies of scale by joining one of a group of people who are doing it, and all the time and effort you save. I mean, you tell the stats, Scott, of people from South Africa, 80% of them or something, they lose money with their first few investments because they don't know how to do it. So just, get advice from someone who's doing it. There's nothing wrong with that. For some reason, though, men don't like that. It's a well-known statistical fact that if men get lost driving around on vacation or something, the last thing they want to do is ask a local for directions because they don't want to admit to themselves that they're lost. It's kind of ridiculous.
So just in terms of that, I mean, you talk about partnering, the next question, Dolf, would be how would you, how do you find out what is the key to partnering? So how do you partner with the right type of people, in your opinion? How have you partnered with some of the best in the world, be it Tony Robbins, Robert Kiyosaki, Donald Trump, just to name a few? How have you done it?
Well, without sounding facetious, the best way to find great partners is to be a great partner. Because if you offer great value, then they will find you. They will hunt you down. I never approached any of the people that I've worked with. I never approached Trump, may I please work with you? They tracked me down. So you've just got to deliver value, and then people will want to work with you. And that's why whenever you do anything, always offer something. Even, you did the same thing, Scott. You said to Peter Feenstra and Henny, I don't want to be paid. I just want to learn, but can I just come along and sit in on the meeting? So, it's what you offer. And this is, people often think, what's in it for me? And if you as a listener think, well, what's in it? What can I get out of this call to make it worth my while? Well, there's nothing wrong with that. We are trying to make it worth your while. But you've also got to think, what can you do to make it worth our while to even be doing this? It's a two-way street. So find a great partner by being a great partner. They will track you down. And then, be willing to help. We notice it when we take people to America. There are some who are high maintenance, and there are some who are just a pleasure to work with because they're always happy to do things. And I know that sounds a little bit like more philosophical than a true real estate answer, but it's the truth of it. And after a while, you get the luxury of only choosing to work with people you want to work with, because it's just too difficult working with those who are a pain in the butt.
Yeah, no, look, I completely agree with you. Kim Winter and Desmond have asked me, how they're going to get their $100 voucher. So bear with us. We're nearly done, and I will get on to that. Dolph, just quickly in terms of training, you've trained with some of the best in the world, flown all over the world. With where technology is going, and I mean, even tonight's quite interesting. You've got people, all over the world. I don't know if you know this, Dolph. We actually did the research just yesterday. We've now got users on our platform from 80 different countries, and people have invested from 17 different countries. And I mean, you're in Indonesia, I'm sitting in Nyasna, and we, literally are sharing this knowledge with people from all over the place. But I mean, what is some of the, shifts in terms of training that you see now in terms of what people can get access to? In the past, it was go to a live course and read a book. Where do you see it going?
Well, you've touched on it before, Scott, on this call, that it's electronic training. The fact that we can be on this call now and from all different parts of the world just highlights it. There was a time when people didn't want to buy cassettes anymore. I remember we shipped a bunch of cassette courses to Singapore, and they called me and said, "Are you out of your mind? We will never move these. No one wants cassettes." I said, "Well, what do they want?" He said, "They want CDs." And I said, "But no one has a CD player." Actually, my prediction turned out to be true, because nowadays no one does have one. My daughter, who's just turned 16, is actually proud of the fact that she doesn't own a single CD. And she sometimes laughs at me for saying, "What are you going to do with your drawers of CDs? You never use them. You use the digital version anyway. Why not just dump them?" So the world is changing, guys, and it's just a matter of, everyone's on this call. We don't need to mention to people on this call what the new ways of education are, because they're not only aware of it, they're experiencing it right now. So yeah, it's more digital stuff. There is a downside, of course. There's nothing quite like being in a room, being somewhere, or more particularly, Scott, being on location, looking at a building. When you hear someone else talking about something they saw 3 weeks ago, it's not the same as you being there in the moment. Just like when you were on those tours, Scott, of those properties, and we had all those discussions, the value was in the reality of it, not the digital facsimile of it.
Yeah, no, look, I completely agree. I think the best part for me is that you can learn while doing. My brother summed it up when he said, "Well, I don't really understand multifamily or medical or necessarily a development in Australia, but now with the minimum investment at $1,000, I can actually go and invest in all three and learn while doing." And so I'm an investor in the building. I can learn while the building's going and the investment's going, and I can get that experience. So for me, that's probably one of the key things. And equally on the buyer's trip, Dolph, like you said, it's best to be on the ground, but only unfortunately a couple of handful of people can actually physically be on the ground. And an idea you actually started was the whole digital buyer's trip, so that people can actually watch it, from their cell phone wherever they are in the world. And again, they probably don't get the exact same experience. I completely agree with you, but they're at least getting closer to the experience than reading about it in some PDF report or some email.
Right. So I'm on a band limited line here, Scott. Did you say that people can actually watch it, or that people can actually watch it? I just wanted to get clear.
Yeah, no.
But anyway, either way, they can see what's happening. And
So,
it's very true. And I mean, that's why for years, Scott, and you know this, I've been cutting videos, guys. I used to cut a video a week, and we would sell them. People paid us $50 a month to watch them. And we did this for years. I did it for 5 years straight. And then an event happened in the world that caused my subscriber base to go down to zero over the course of about 6 months. And that event was the introduction of YouTube. And no one else was doing videos before YouTube, because you needed a video streaming server. And, gosh, we built our own. And wonderfully, we had the knowledge on how to do that. So anyone whose credit card had cleared, they'd get an email saying, "Here's the latest video from Dolf. He's in Borneo or wherever, and he's talking about such and such." So we've had the pleasure and luxury of doing these for years. But that technology is still valid, and that's why we came up with the digital buyer's tour, where you didn't actually physically need to come to the States to see what these properties were like. And there's still a lot that can be done that way. And, it's all out there. It's just a matter of, the listeners today deciding at what point do you want to participate. Because
Yeah, and
sometimes we say, all right, well, I got what Scott said and I heard a little bit about what Dolph said, but I need 15 more of these webinars before I'm willing to invest $100. I would say to you, invest in the stock market. That's more your market. At some stage, you've got to say, okay, I'm ready to give this a go. It's not as if you need a minimum of 1 million anymore. What's our minimum now?
1,000.
1,000, and you can invest. I mean,
Yeah.
that's a pretty good deal. That's awesome.
So I'm going to just jump through this because I'm conscious of the time here, Dolph, and I think it's either Hoppers midnight, 12:30 at night for you, or 1:30 in the morning. I'm not quite sure,
It's
but
1:30. Believe it or not, I have to get up at 4:30 to go to the airport to go to Palembang in Sumatra tomorrow.
okay. Well, I'm going to keep this very short then, just quickly. So I think we've spoken about the technology and how people can get mentored. I mean, I'm going to show a couple of things just now around the 30 videos, discussions with Dolph, etc., etc. In terms of how people can invest with you, I think you've already explained this. Where now with modern technology, you and Michiel and Henny, etc., are all working together on the investment committee. You're actually getting involved in the deals yourself, like I'm getting involved in the deals myself, and so people are actually participating and no longer reading or learning about it in a book, but can actually participate, in real deals in terms of what's actually happening. And then, how can we help people invest with $100? Well, guys, this is where it gets really exciting. We tonight, for everyone who's online, we're actually going to give away $100 coupon, so you can actually participate. If you've never invested overseas, if you've never had a dollar before, well, tonight's your first time. So we will be emailing everyone who was on this webinar. So if you weren't on the webinar, if you left early, then tough, because that's the advantage of turning up live. And we will email it out. If you are a current investor, I see that there's a number of current investors. I see Clive and Michael, etc., Louis Stein, etc., online. We'll still send you the voucher. Maybe pass it on to a friend and let a friend participate. And we will be sharing that with everyone in terms of how things are going. I've already mentioned to you around the discussions with Dolph. Dolph has actually shot 30 videos all around the world. It's an amazing information. I've actually seen the intro to this from 15 or 20 years ago, where he's in all these different cities and countries, and it's just him sharing knowledge around real estate, what's happening on the ground, etc., etc. So I really want to be able to share that with you. My last question for you, Dolph, and then I'll wrap it up so that you can go to sleep, and I'll finish off for everyone. What's your kind of prediction on where you see real estate going in the next 10 years? What are your thoughts on this?
Um, Gosh, it's of course hard to predict. I think technology is going to change the face of the living space that we live in. I think there's going to be a lot more automation. I was an early adopter of this. My home's probably one of the most ultra automated. Like, I never turn an alarm on, for instance, when my phone is more than 100 meters from the house, which assumes I'm with the phone. Any lights that were left on get automatically shut down, etc., etc. If there's a leak in my home, like even now while I'm away, it turns the water supply off. You name it. It's automated up to the gazoo, but it's going to become more and more common, that sort of thing. Micro technology, nanotechnology for insulation, making our houses warmer or cooler or whichever, that's going to really rise to the fore. Energy consumption is going to go down. Energy storage is going to go up. Solar cells are going to become more efficient. Instead of arguing with electric authorities as to whether we should sell power back at the same rate as we buy it from them or not, we'll just collect energy with our solar cells and store it in batteries and then regurgitate it at night. So I think all that's going to change, but they can be retrofitted to houses. Housing will still be in demand. The population is still increasing in the markets that we're looking at investing in, and prices, I believe, will continue to go up. I still think it's the best long-term investment that there is. So, in that sense, nothing has changed. It's just, it will look different. It's like car technology from year to year, guys. It changes very slowly. If you have last year's model, whatever, BMW or Chevy or whatever, a Peugeot or something, and you compare it to this year's models, the changes are incremental. But when you look over a period of a decade, the changes are huge. And cars have become far smarter and better. Self-parking cars, and then they had cruise control, and then cruise control with radar, so you never bump into the car in front of you, etc., etc. The next big leap is going to be driverless cars. It's going to be a massive change, but we're still going to have cars. Cars are still a good investment. Well, if you're in the automotive industry, I wouldn't recommend investing in a car as an investment. Have a car to get you from A to B, and don't try and get a fancy car. If you need to drive a Bugatti or a Ferrari or something, rent one for a weekend when you feel as though you're having a bit of a frivolous time. People always expect that I drive some fancy car, and I do have a nice car. It's a Lexus. It's the ultra luxury version, but it's 14 years old. And I don't mind. It still gets me from A to B, and I'm not there half the time anyway, so why would I need it? A fancy Ferrari or something. And it's the same with real estate, guys. Be modest. Don't just invest to make a lot of money and become a rich, miserable person. Have fun along the way. Make sure you look after your friends. The best way of having good friends is being a good friend. Look after the people you care about, because that determines what kind of people end up looking after you.
Well, on that note, Dolph, I really want to say thank you to. I've put up two little polls, here, and I'm conscious of your time and the fact you've got to be up in 3 hours. So, what I suggest, there's a number of questions here. I'll wrap it up in the next 10 minutes. But from your side, what I suggest is if we say thank you very much to you, I can answer the questions. For those people who stay online, I want to share with them how they can get their $100. I also want to share with them how they can have an opportunity to win an apartment in the tallest building and one of the most iconic buildings in Africa. And equally, I want to share with them some of the opportunities going forward. But I don't want to keep you online, because you know what I'm talking about, and I'm very conscious of how late it is there from your side. So I just wanted to say to everyone, thank you very much. It's awesome having you online. And yeah, sorry we got you up so late, but thank you for sharing.
Well, thank you too, Scott. A pleasure as always. And thanks everyone for listening and putting up with our ramblings. And as I always say when I finish just about anything, successful investing to all of you. Thank you so much.
Awesome, Dolph. Have a good evening. And for those of you who stay online for the next 10 minutes, I'm just going to share some extra information, and equally, I will answer the questions that everyone has asked. So anyway, let me crack on. And I quickly wanted to run through here.
It's one of the most reliable and profitable investments in the world. 49% of the world's wealth is held in real estate. It's what built the wealth of kings and aristocrats. But investing in real estate, for the average person, is simply out of reach. It's a playground normally reserved for millionaires or billionaires. Only the top 0.1% of people own and invest in commercial real estate. There's a wealth gap across the globe that's pricing out the middle class from investing in one of the best ways to build and preserve wealth, which will enable them to give their children a better future. Studies prove that children who grow up in households who have stable financial futures do better in life. That's a fact. But too many people don't have access to it. We want to change that. Let's open up the opportunity to people who work hard, manage their finances wisely, and need a place to invest for their family's future. What we're doing at Wealth Migrate is exactly that. It's simple, but incredibly powerful. We're eliminating the typical barriers to entry when investing in real estate, whether that's knowledge, money, experience, or access. Access to what the top investors know and are able to invest in, but that you can't. We're giving people the opportunity to invest globally in commercial real estate through the internet, right alongside high-profile investors, and earn the same returns and monthly dividends. We're using the internet and our technology to give everyone access to real estate investment opportunities you've never had access to before. By giving you access to global real estate investing, our goal is to empower 1 billion people by 2020. And close the wealth gap that currently exists. You don't need to invest huge amounts of money to become a part owner of a project. It levels the playing field and helps developers start new projects. It's a win-win for everyone. We've published 19 books, including New York Times bestsellers. And then there's our technology, our secret sauce that helps you make smart investments. Now it's your time to grab this opportunity. Do it now with our trusted, secure real estate investment platform. Visit www.wealthmigrate.com to see what amazing opportunities are available right now.
So guys, I just wanted to give you that little video because I think it's pretty important. You know, we've discussed this a lot tonight, but 49% of the world's wealth is held in real estate. Only 12.9% of the world's population actually has access to real estate. And of that, less than 1% actually goes on to retire wealthy at the age of 65 in the Western world. And as Tony Robbins says, the way to be successful is to copy what successful people are doing. So if you're not doing what the millionaires and billionaires are doing, then you've got a problem because you're not going to be able to get the same results. The current system is broken. You know, no one trusts the system. There's very little transparency. There's large fees with low returns, and there's plenty of middlemen. And really what technology does in any system is that it cuts the costs, it cuts out the middleman, and it increases the trust, the transparency, and the accessibility. The problem when it comes to real estate is that it's very, very difficult to get involved, whether it's at residential or commercial level, and particularly in quality opportunities, it's very difficult. The barriers to entry are high, there's no access to quality opportunities, and then when you think about going global, it's just too difficult from an expense perspective, legal, banking, compliance. So what technology is done all over the world, whether you take music, whether you take travel, whether you take taxis, whether you take accommodation, it's come in and it's disrupted the industry completely. It's cut the costs, cut out the middleman, and increased the trust, the transparency, and alignment, like I said. Well, it's happening to real estate. It's a $13 trillion industry. There's a lot of local platforms all over the world, over 250 that we're aware of. Well, we sat back as a team, and I've been investing internationally since the age of 22, and we said, how can we make global real estate investing easy? And we got Dolf involved back in 2014 because he's an international player. He understands the whole international perspective as well. And we said, how can we make it easy? And so we built it. And literally, if you log in, and I always laugh. I know Derek and Lee are online, but I learned such a lesson from them when I was in Dubai a couple of weeks ago. And Derek just kind of pulled up his portfolio on his cell phone, and you can see my portfolio here on my cell phone, and I can literally take you through my properties, where I've invested, my different bank accounts around the world, all my different opportunities, and then all my different securities. And whether that's on my cell phone or on my desktop, these pictures on the right are real. And so really what we've done is that we've made it really easy. As Derek said, what used to take him weeks, months, possibly even years, it took Henny and Peter over 5 years to get into Australia, now can be done in minutes. In less than 10 minutes, he was able to invest in America and Australia, literally through his laptop. It enables him to be able to create true and global wealth. You only get access to quality partners and quality opportunities that, quite frankly, most of us have never had access to. And the best part is we can invest from $1,000. When you look at it, it takes away all the hassles, the management issues. Michael always says to me, what about the toilets leaking? Or even the complex tax structures. Someone said, what type of structure do I need to invest in America? Is it privately? Is it an LLC? Is it in a trust? Well, we've been battling with that for over 4 years, including bank accounts getting closed. Now on the platform, you don't have to deal with any of that. Someone asked, how can we do it from $1,000? Well, again, in the past, it cost $1,000 just to set up an LLC, and even more than that to run it on a yearly basis. And now, because of technology and because of a platform, we've allowed people to get rid of all those friction costs and be able to participate. And so they can really just focus on the best returns available in the market today. It's really simple. You go online, you sign up, you select an investment, you transact online, and ultimately the part I like most is that you can manage your portfolio. And like I showed you already, I'm not kind of giving you hearsay. If I take you just very quickly to my portfolio, sorry, give me 2 seconds here. You can actually see here, hopefully you can see my screen, but you can literally see this is my personal portfolio, where my investments are, my funded investments. So if you log in, you can see my different fund investments around the world, the different returns they're making. You can see my different wallets. So again, I don't need to have American and US and UK bank accounts. They're all being set up. The UK ones are being set up at the moment. You can see all my different securities. So if you want to be able to trust it, literally this ticker number, as it's known, you can go on Bloomberg or any other financial system, and you can actually see that this security has been listed. So when I invested my $10,000, You can see the fees, the taxes, etc. It's all there globally now. And then also it kind of lets me know about new opportunities that are coming up in terms of where the future is. And what I love most is I can manage it on the dashboard in terms of where we're going. As a company, we won quite a few accolades recently. We were in the KPMG Global Top 50 in November last year. We got over $100 million in assets under management on 3 continents. And one of the ones I'm proudest of is that the investors are reinvesting in the region of 70% reinvestment from investors. So we're obviously doing something right, that people are liking it and reinvesting. Something that's pretty new to a lot of people is when you want to understand the credibility of the board. Justin Clark is the founder of Private Property. He's built marketplaces or platforms in 16 different countries, and most people know Private Property. Martin Freeman actually came on a buyer's trip many years ago, invested in both houses and in the medical stuff, built 5 fintech companies, and has also joined. Paul Nadera is one of the world experts on compliance. He ran the oldest equity crowdfunding platform in the world. When the SEC needs help, which is like the FSB in America, they actually called him up, and he runs our Australian division. Dr. Dolf de Roos, I think, needs no introduction after tonight's webinar. And then you've got on the property side, you've got Henny and Peter, both US dollar billionaires, have made substantial wealth out of real estate, both in South Africa and in Australia, and Peter in Europe as well. And they really are heading up the investment committee. And then, Joyce Koffler is one of the world experts on fintech, and Lex Cisney has helped over 100 tech companies be able to scale, and based out of California, and is helping us grow. There's really 3 parts to our marketplace that we focus on, which is trust. So really being able to build out trust for people, selection, so getting quality, access to the best opportunities in different markets, and then convenience, and really allowing it from an e-commerce solution perspective. And this is just an example of the type of reports that people get on the real estate opportunity, so they can sit, whether it's in Dubai or South Africa or Shanghai or Sao Paulo, they can sit on their mobile phone, on their laptop, and be able to read all the reports and understand what is actually happening. GIDS is our back-end system. It's our secret sauce. Some of you asked tonight about REAP and REAMS, which is the system that Dr. Dolf de Roos invented 20 years ago. There's multiple systems here, including my own systems, Henny Besaidno's systems, that we use to help people understand where to invest, when to invest, why to invest, what to invest in, who to partner with, what city to invest, what country to invest, what impact is currency going to have, what structures to invest in. All the really complicated questions that people need to take into account, we've now built into a large algorithmic system called GIDS, which is our global investment due diligence system. And it actually gives the investors, you guys and myself, a rating, knowing where to invest. So trying to make our investing smart so that you can be a smart investor, knowing what to do and when to do it. This is just an example of REAP, which was the system earlier that someone was asking about, which is Dolph's system that he built long before kind of the internet took off. And this is now all being built into the technology on the back end, so that people have access to know which is the best opportunities to invest in. In terms of pipelines, Henny and Michiel and Willie and the team, with the team in Australia, Paul and Richard, with the team in America between Andrew and Bruce and the team there, and the team in the US between Arthur and Lauren, etc. Sorry, in the UK. They've built strong pipelines of really good quality opportunities in different markets. So niche focused, certain cities, certain niches in terms of where you are. And a good example of this is 2 great opportunities which are closing out as we speak at the end of this month. And the one is Cypress Ridge, which is in Texas. It's a multi-family. It's 252 units. I personally invested, my family, me and my wife have invested in this deal. It's a $15 million deal. There's about $6 million in equity that's being invested. The internal rate of return is just short of 20%. Our partner on the ground, by the way, is investing $500,000 of their own dollars, and they're organizing the mortgages with the banks, which is why we're getting such competitive rates in terms of where we're at. The annual cash on cash is 7.9%, and the minimum investment here is $10,000. The reason that this one's $10,000 is that it's literally closing out at the moment, and so it was $1,000, but it's we really are getting to a time crunch in terms of closing it out. There's quite significant demand in terms of more people want to actually invest in it than there is the opportunity left. but it's pretty much coming down to first come, first serve in terms of people being able to get involved. And you can see the GIDS rating there is sitting at 9.4. This is just a quick, I'm not going to play the whole thing, but I can set it to. So this is a quadcopter view that I did when I was there with my field back in September. So it gives you an idea. It's pretty much what we would call a B grade. So it's what we like. We always like to go middle income, and it's in the suburbs there in Dallas. Sorry, in Houston actually, in Texas, which is one of the biggest cities in Texas as part of the Texaplex. If you want more information on it, just write in there Cypress, which is in Texas. So just write in Cypress, and I can send you, me or one of the team can send you more information on it. But it really is. It's the first multifamily I've invested in America. I've been looking for 4 years. And again, the reason I did it was because of the PPA group and Monty and their amazing ability to execute. And what's really interesting, there were over 20 offers on this building. We were not the most expensive, as in we didn't put in the highest purchase price, but we managed to secure the deal because Monty has such an incredible track record in the Texas market, being one of the Inc. 500 companies in the market and someone that specializes in multifamily. And then on the medical side, we've done very well in medical over the years, with Henny really spearheading that. I've invested in every medical deal with Henny since we started, and really, I absolutely love medical for all the reasons Dolf said. The problem is that the institutionals are actively getting involved in medical. It's between multifamily and medical, they're the top two sectors that people are investing in now, which is making it really difficult because cap rates are compressing, which means prices are going up, which means they don't necessarily make sense. And, we struggled for over 9 months to find a good opportunity since we finished our last one. And with Paul, who's been our partner on the ground there in America, is really good in medical as well. And this is Medical 7. It's a $10 million deal. There's about $3.5 million in equity. And you can see there the average cash-on-cash return is about 8%. The internal rate of return is 13.5%. And again, just because of the tight time frames, the minimum there is $10,000. If you wanted to invest $1,000, we did allow people to invest $1,000. It's just because of the very tight time frames to finish now. But if you are interested in medical, even if you want to invest from $1,000, then type in there medical, and we'll see what we can do. There will be preference for the more sophisticated investors that are able to move quickly and participate and close out now, because again, we've got an oversupply of people wanting to be part of the deal, but we've got very tight time frames in terms of closing. America, there's no way to delay. It just has to happen. They don't agree or understand public holidays. And then you've got a GIDS rating there at 9.6. And so lastly, just in conclusion, some of the deals coming online. We spoke about EB5, Hollywood Circle's coming online. We've got the PPA group are bringing 2 new multifamilies, hopefully, to the market. The Aussie team has been doing wonderful work in terms of 2 new medical buildings coming out in Brisbane. Sentinel, who some of you had the privilege of meeting at a wealth partner level, which, back in October last year. Wealth partners are shareholders in the company. So if you want to be a shareholder in the platform, if you want to be a shareholder with Dolf and with Henny and myself and others, then it's what we call our wealth partner. If you're interested in being a wealth partner, it's by invite only, but just put it there and I can let you know some more information. And then 0 to 1 is, we're still finalizing the due diligence and the compliance on this. As soon as it's done, we're looking to launch this, but it's going to be the tallest building in Cape Town, one of the most iconic buildings in Africa, and we're allowing people to participate in that as part of our South African launch from as little as $1,000. And really, this South African launch is something we're quite excited about. We're actually going to, so people will be able to invest from 1,000 Rand now. So we really want to drop the barriers to entry. So, my attitude is get online, get involved, and we're also going to give away an apartment. And the reason we're giving away an apartment is that we've got a great deal that we've set up with the developer there. We both feel the same way, that, generally the pyramid of real estate has only been available to the wealthiest of the wealthy. And now we really want to open it up to the high net worth individuals, to the professionals, and to the rest of the 99%. And, you know, by doing that, by giving away an apartment, you know, granted it's going to take 3 years for this project to build, but we will instantaneously create a millionaire. You know, the apartment's actually worth $2.6 million. And there's going to be a whole lot of content that we're going to be sharing in April. I'm just giving you a heads up. You know, we're not allowed to publicly go out there and market it yet, but I'm just letting you know what's coming. And really, when we launch this competition, the apartment's going to be worth 2.6 million rand, and someone's going to win it. So our whole thing is to create global wealth. Our whole thing is to empower people. Our whole thing is to help people, you know, really go out there and achieve their financial destinies. And we want to show people how it's possible. And the other thing that's great here with this project is we're starting our purpose-driven projects. So all 3 of the projects I've spoken about, from Cyprus to Medical 7 to 0 to 1, all have a purpose tied to them. And there's generally 3 sectors we focus on: empowering children with entrepreneurial education, so that's through Lemonade Day; empowering women and giving them access to both financial literacy and equally wealth opportunities; and then giving everyone access to wealth through real estate and technology in terms of where we're at. So this is a competition. You know, I'd really recommend that, and I'd ask you to go out there, let the world know about it when it happens. Hopefully we're sharing and adding value to you. And equally, if you want to improve your chances of winning, you have to sign up on the platform to win. But if you want to improve your chances of winning, you can share it with your friends. And for every friend that you share it with, you will actually, there's a tracking code, and every single friend that signs up, you'll get another entry in the draw. So you got the opportunity of sharing it with your entire friend base, adding huge value to their life, because not only can they learn about, you know, what's going on in the world and learn from great people like Dr. Dolf de Roos, but equally, you know, you enhance your chances of winning in terms of that apartment. And we're going to have a bit of fun, like leaderboards, etc., so people can see how they're doing in terms of sharing with their friends, basically. But the most important thing is we want everyone to get started. And a lot of people are hesitant. A lot of people, you know, will be sitting there going, it sounds too good to be true, and there's a whole lot of things in their head that stop them. And so our attitude is, well, we're all about empowering people. We come from an abundance mentality. And so we really want to give people a voucher. We're going to give you a $100 voucher. We're going to email out that voucher to you. What you do is you log in, you use the unique code that's on the voucher for you, and with that voucher, you can actually invest your $100 in any of the projects that I've spoken about. And obviously, there'll be local projects in South Africa and offshore projects. And then, you know, if you are already a wealth partner or an investor, and you want to pay it forward and share it with a friend, well, you're going to be able to have that option as well. You know, this is not a public thing. They're specific per person, and we want to share it with the best people. And for the people who've been online tonight, we want to share that. For those of you watching the recording, well, that's one of the advantages of turning up live, is that you're going to get, you know, the people who are live are going to get access to the $100. If you beg and plead and whine because you didn't turn up and you've got a good enough excuse, then maybe we'll consider it. Just speak to one of the team members. And then really, the South African launch is something I'm truly proud about. You know, this is something that for me, you know, we've been helping people invest around the world for many, well, over 3 years now. I've been doing this for over 17 years now. But the South African launch, it's taken us a long time to get the compliance sorted. And we are now a juristic rep here in South Africa of a company that's got the FSP license. So again, I can give you all the details if you're interested of that. But really just go online and register. You know, get involved. For anyone that's registered online, they'll get access to our 3 papers. So the 5 laws of building wealth through real estate, the 5 keys to offshore real estate investment, and the 5 ways to expand your global real estate portfolio. So this one is more for beginners, this one's for intermediate, and this one's for very sophisticated investors. You'll also get access to my book, Property Going Global. So we'll send you an e-copy of that book, which has all the research that you're asking about tonight. You'll get access to the 30 videos from Dolf, the discussions with Dolf, and if you want more understanding around coaching and mentoring, a lot of you put it there tonight, but if you just want to type it in, if you don't feel you were heard, type in mentoring, and we're going to look at a number of ways to work with Dolf in our inner circle. And then, you know, I think I've explained tonight how you can invest $100 in the US, Oz, the UK, how we're launching, you know, one of the most iconic buildings in Africa. You can invest from 1,000 Rand. And equally, you know, from an investment perspective, you know, the minimum investment now is $1,000. And then for more sophisticated investors, it's, you know, from $10,000. and in some of the deals that are closing out now, where really the demand is more than the supply. And we will have good deals coming online, but I always believe that a bird in the hand is better than two in the bush, and that's why I invested in both those deals personally, to ensure where it is. Some dates that are quite important. I believe very much in technological disruption. These are the virtual reality glasses that we've been handing out to all our wealth partners and VIP guests. We're taking them on virtual reality tours. We're talking about digital disruption. We're talking about how to be a shareholder in our company and our platform. We're talking about how, really technology is disrupting the space and how you can take advantage. If you're in Johannesburg and Pretoria, unfortunately, you've already missed it. It happened last week. We can send you the recording if you just want to write in there digital disruption. If you're in KZN, well, we've got the event tomorrow night in Umhlanga. And if you're in Cape Town, we've got it in the city center on Thursday night. In early April, we've got the South African launch, and we're just trying to tie up with the press around the PR and the launch because it's going to be a digital launch. And then for those of you that are interested, I've missed out one date here. Jaco and Michiel actually go on a buyer's trip on the 28th of March. It's probably too late for you to go physically. There are people going with them, but you can follow it on the digital buyer's trip. So if you're interested in that, just write in there digital buyer's trip, and we can give you that information as well. And you can follow them live. If you come to our digital disruption event, you're actually going to get a set of glasses like this, so you can watch the entire thing in 3D, which is pretty cool, in virtual reality. And then, for our VIP guests, our sophisticated investors, and our wealth partners, our wealth weekend is the 23rd to the 26th of June, which will be with some of our American partners, our Australian partners, and really, it's an ultimately unique experience to be able to spend time with some of the most sophisticated people globally, discuss where the world is going, discuss where the risks are, discuss where the opportunities are, and really bond with like-minded people in terms of where we are. So I just want to finish with our vision, and then I'll answer any questions. But, a lot of people talk about a family office, and, a lot of people don't even know what a family office is. But ultimately, it's a private wealth management advisory service. And in simple terms, what it does is it helps the wealthiest people in the world understand at a personal level what are their needs. It then looks for the best opportunities in the world, and it marries the two together, and it creates generational wealth. And it's what we refer to as smart investing. And our vision really is that up until now, that's only been available to the top 1% of the top 1%, literally a microcosm of the world's global population. And our vision is to put smart investing in every single person's pocket. And so, on that basis, I wanted to just go back to the questions here and see if there were any questions that I hadn't answered, or if it was anything that anyone else wanted to ask. I know there's been a lot of information shared tonight, and I know that I've also spoken for a long time, but I just wanted to see if there's anything else. So let me just go through the questions. Jump out, Jaco, if I've missed anything as well. I think I've spoken about all the different things that were on my notes, but just shout if I've missed anything. I just want to go through the very quick questions here. One of the things Peter asked was about the currency and why the rand is so strong against the dollar, especially considering interest rates went up. The reason being is that they actually thought interest rates were going to go up faster in America, and so when they didn't go up as fast, the currency people had taken forward cover on it. I'm no currency expert, and so the guy that helped me write chapter 2 of my book, James Painter, all around the rand, is, in my opinion, the best person in the country, and we're doing a live webinar with him in the next coming weeks, and also with Andrew Rizek, the person that helps us move all our money in real time, so he can help discuss it in terms of where we are. I think Dolf spoke about how to do no money down. The question is how to do it with him. Bradley asked about the top performing residential cities in the US. Bradley, it's all in my book, so if you sign up, you'll get a copy of my book. And in my book, I show you where to get the best research globally, in America, in England, in Australia, and you can find out where the best cities are to invest long term. Mariella was asking about the $100 voucher. So like I said to you, that's going to be coming on your emails, so make sure you watch your emails. EB5 is the way to invest, where you put $500,000 down and you can actually get a green card in America. Carmen asked, what are my thoughts on assisted living? So again, got a lot of experience in this. You've got to be careful with assisted living. I like the medical real estate component of it. Often they're sold as operating businesses. We don't like to be an operating business. We like to own the medical facility. We like MediClinic, as an example, to run the medical facility. We don't like to be in the operations of medical. And so we like to buy the real estate that's the underlying asset because it's passive. We don't want to buy into operating businesses, so that's one thing to be aware of. And equally in England, I've got friends that invested in assisted living in England for a long time, and then overnight the government changed the laws, and the entire that whole market, like, literally lost tremendous value because the government felt sorry for the old people and changed the laws, and they went from very good deals to very bad deals very quickly. George asked about buying property in a personal name company or trust in America. George, I've been investing in America since 2012. I could go into this in a huge amount of detail between trusts and LLCs and what you should or shouldn't do. Quite frankly, now through the platform, you've got the ability to invest without all the hassle. We've also had massive problems with American bank accounts for foreigners. We've had over 4 different banks close all the bank accounts for overseas people, and yet now with the platform, you've got access to be able to do all of that. Reap and Ream, I think I've explained. Do you provide raising capital training, Edwin? I don't know. We provide lots of training, but we teach you by doing. We don't sell courses. We're not an education company. We teach you by doing, and so I'm sure you'll learn how we do it by participating with us. Ian said Dolf's got a great course on commercial real estate. Completely agree, Ian. Although I've learned a lot more by investing with Dolf than reading his books and watching his DVDs. I tend to say in the old days you used to learn by reading. Now today you learn by doing, which is how technology really has helped us. Boom, boom, boom. How do I qualify for a buyer's trip? Great question, Bradley. Good question, actually. So there's only a few people that get to qualify every year. It's generally kind of by invite only. But if you're interested in buyer's trip, just type in their buyer's trip, and we will have one of the asset managers speak to you. We like to make sure that we've got sophisticated, like-minded people going on the trip. There is actually a deposit that one needs to put down because there are quite a few costs incurred. We make no money from the buyer's trip. We just want to make sure we've got the right people coming on the trip for everyone's sake. Okay. When will Wealth Migrate accept Bitcoin? What a great question, Eric. My understanding, Yaku, if you're still there, is our BitPay goes live tomorrow, I think. So to answer your question, BitPay is a way to pay through Bitcoin, and so that'll be tomorrow. Someone asked about what my opinion is on Bitcoin. They actually had an exchange that they were trying to get listed through the SEC. They've been trying for 3 years. It happened last Saturday. They reckon that there's about $30 billion, $25 to $30 billion invested in Bitcoin. If that had happened, over $300 to $400 billion would have come into Bitcoin. It didn't happen, and so that story continues in terms of where it is. Brian's asked, where do the dividends get paid? To the American account. So each person has an account on the platform, Brian, and all your dividends get paid directly into your wallet. You have complete control over your wallet, including moving funds back to wherever you want it, be it England, South Africa, China, or anywhere else. Okay, so people have asked about Cyprus, medical, digital disruption. Okay, so the guys that are asking about digital disruption, we will, if you can't make it to Durban or Johannesburg, Durban or Cape Town, again, they are for Wealth Partners and our VIPs, so they are exclusive, but we can certainly send out the recording if people don't have access to the information. And I'm not sure if I have covered all the questions. Scott, can investors attend the Wealth Weekend, or is it strictly for Wealth Partners? So, Dimitri, great question. It is primarily for Wealth Partners, and we do have a wonderful community now of Wealth Partners. Now, again, just to confirm, Wealth Partners are shareholders in the company. They've actually invested in the company that has built the platform. We're all shareholders together in that company. It's a Hong Kong-based company, so it's an offshore company with earning US dollar revenues. And the weekend is small, intimate weekend, and so it'll be first come, first served to Wealth Partners. And then if there are spaces, it'll be by invite only to sophisticated investors in terms of where it is. So if you're a wealth partner, then you're guaranteed to be able to come. But if you're not, I can't guarantee it because there's only a certain number of spots that are available in terms of what's on offer. Okay, any other questions? I can see that I've finished just short of 9 o'clock. I said it would be going till about 9. I tend to always talk, Dolf, and I tend to always talk for a long time because there's so much value we want to share. And I didn't actually realize Dolf was in Indonesia. I thought it was going to be like 10 a.m. his time in Phoenix. But any other questions anyone else wants to know? Anything else I can answer? What about some ideas quickly for the, all the people that are online tonight? Give me some ideas of some other webinars you'd like to know, from me. Would you like to be able to just ask anything from myself? You want to know anything from me, what's happening in the markets, what my opinions are, who are some people you would like me to interview? How can we add more value to you? We've got an incredible community. We want to continue driving it. We want to continue adding value to it. Do you want to do another wealth movement? Do you have access to all the videos from the wealth movement? All the trainings where Dolf de Roos did it. We've got over 5 hours of training from Dolf. And do you know about where those are? If you don't, type in wealth movement. We can send you all those videos. How can we add more value to you guys? What do you want to know? How can we add value? So yes, I will send you a recording of the webinar, Levon. So thank you. I can see you're still in the office, so no problem. And because you're online, you'll get the $100 voucher. For those of you online, next time if you're thinking maybe I should come, maybe I shouldn't, you never know. My request to you before anyone signs off is that hopefully we've added a lot of value to you tonight. I want to keep, as a company, really adding value to you. My only request is that I believe we've got a moral obligation now to go out there and tell the world about how things are changing, tell the world about how they no longer have to invest in, quite frankly, crappy investments where you're laden with fees. I mean, there's a great book, and I don't know if I've got a copy of it sitting here. I've got one downstairs, the latest book by Tony Robbins, where 96% of the average funds don't actually even beat the market. If you have just 1% in fees, it equals 10 years of your retirement income. So dramatic impact by cutting out the fees, cutting out the middleman, increasing the returns, getting access to the best investments for you and your family. And I believe we've got a moral obligation to share it with everyone. And, in South Africa, we've got the big South African launch. I ask you guys, I can go out there, I can beat my drum, I can try and tell the world about it. But we're so much more powerful if there's hundreds, thousands of people doing the same job, and it's really to your benefit now because you can also win the competition in the apartment in terms of where we're going. Can you look at interviewing Robert Kiyosaki and Tony Robbins? Oh yeah, no small task, but I am working on it in terms of where we are. Webinar ideas, Bitcoin info, should we buy? How does it work? Pierre, we focus on real estate, so I can talk about the disruption of technology. I'm not an expert on Bitcoin. Maybe we can find an expert on Bitcoin. I'd probably need to learn more about that myself. So, good example. Certainly now that we are launching BitPay. So people have asked about the wealth movement so they can get access to all those videos. Are there other countries in the pipeline that you're considering? Great question, Ian. There's a number of countries that we're looking to launch. At the moment, purely on the investor side, not necessarily on the investment side, because we really got to be careful in the countries we launch to make sure that those countries have all the fundamentals in place and that we don't make mistakes. Where is there going to be a development in Indonesia? I'm not sure what you mean there in terms of actually physically on the ground. We are looking to get Indonesia up and running, but it'll take time, through Dolf's contacts to find the right partners on the ground there. Buying property direct versus crowdfunding. That's a great question, George. I think really it comes down to three things. Firstly, you're dramatically cutting out the costs. Direct property has 16 different middlemen between you and your investment. So you're directly cutting out the costs, you're cutting out the middlemen, and you're getting access to trust, transparency, and much better opportunities that you would never be able to get access to by yourself. So again, as Dolf says, if you want to go fast, go alone. If you want to go far, go together. And so really technology empowers people to come together and be able to have the buying power of the institutions and get access to much better deals. But I'm actually doing an entire white paper on fintech versus the traditional funds or REITs versus direct investing. If you're interested in that white paper, you can just watch the space. Make sure that you signed up on the platform so that you get access to it. We once had 3 people discussing the political situation in South Africa. That would be good from time to time. So, okay, great, Costa. We'll take that on. I think you're covering all bases right now. Very interesting. James Painter is very interesting. So I agree with you. We need James. Maybe interview people in the know of what is required to immigrate to the US, UK, and Australia. That's a great idea, Costa. I have done that in the past. Certainly time to get an update. So maybe what we do is we do a joint webinar between the guys that do the EB5 into Australia, and then some of the experts that help into the UK and Australia. So that's a great idea. Bitcoin or a future or a subject for the future Thursday Zoom meetings. So Pierre, you're a wealth partner. The information we share on Thursdays is only for internal members and or wealth partners. It's internal information. So yeah, thank you, Pierre. But yeah, there's a difference obviously between Thursday internal sharings, which are only for the team, and for wealth partners. Boom, boom, boom. So this from Levon said, I really admire you as my mentor. Being a Safa, wanted to retire young, retire rich back home to give my kids the lifestyle I had. Does Wealth Migrate help to advise on wealth and portfolio management or personal accounts for funding lifestyles on both sides of the Atlantic? Levon, the honest answer there is we're not allowed to give financial advice. I'm not a financial advisor. There's a lot of regulation in terms of what you can and can't do. What I can do is tell you what I've done. I'd recommend by kind of starting to read my book, read Dolf's book as an example, or, quite frankly, make your own decisions and invest in projects that I'm investing in. It really helped me. I lived in London for 9 years. Now I live in Knysna, South Africa, but yet my assets are overseas and I earn a first world income with first world assets, which gives me huge peace of mind and plan B for my family. So, but yes, happy to help and share what I've done, but I'm not a financial advisor. I have no intention of getting a financial advisory license because I think that investing is common sense and we all are born with common sense. And I don't believe that confusing and complicating things is right. And I believe that that's what the old industry does to keep you confused so that they can charge you lots of fees. How does the platform investor make money as opposed to being in the building itself? Which would you suggest a better option? So, Zaid, there is no difference. So as a platform investor, you're investing directly in the building. You get exactly the same returns. You just have far less hassle. You don't have to worry about LLCs, bank accounts, and all the costs. I know that you've invested in America already, so you know how it works. And so you can dramatically reduce the friction costs and the legal, the tax, and all those fees. And by doing that, you can quite dramatically increase the net returns in terms of what's happening. So I do all my investments on the platform, and I'm even reversing all my properties that I bought prior to us having the platform onto the platform. One of the things Michiel and Jaco are doing, flying to America now, is part of our whole hassle-free project, where we've got all the research from all our investors. And so anyone that's ever invested in an IPS project in, or property, a single-family residential in America, and with time, England, Australia, and South Africa, we're going to be reversing them all onto the platform. Because really, platforms where the future's going. What UK opportunities do you have, George? I've just got back from the UK. I've got a lot of partners lined up in England, and we'll be rolling those out in April. What current projects are you personally invested in? Bradley, I've invested in every project on the platform. I believe now that with a minimum investment as little as $1,000, it enables me to invest. I don't believe in putting money in a one-trick pony and that's it. It's going to make me my fortune. I believe in having a diversified portfolio across residential and commercial and across multiple countries and currencies. And I've been doing that since the age of 22. Now through the platform, Richard Branson always talks about how often he created companies to solve his own problems, like the airline business. Well, quite frankly, the platform solved a major problem for me because I'm bloody useless at admin and trying to deal with all my emails and, management agents and whether I've, paid my rates and taxes or cut my lawn. Now I don't have to hassle with any of that. I can invest in it. But, recently the last three investments I've made, one was in Cyprus, so the multifamily I just told you about, Medical 7, and then also in the stable income fund, which is where you can invest and earn a net 8% return, and it's invested in, but there's no capital growth. It's a 8% cash on cash return, and it's just invested across multiple projects. Boom, boom, boom. Okay, some discussions around the new rulings on the Common Reporting Standards, CRS. Pedro, so I presume you're talking around all the tax and the changes globally. We probably need to get Garth to do another update like he did at the AGM for the Wealth Partners last year in May. So I will work on something that again we'll do at a wealth partner level. And can you recommend a financial advisor who understands international investing? Louise Kruger. No, I can't. I haven't met one yet. And if there are any online or you can recommend any to me, great. I tend to find that financial advisors tend to put people into products where they make the best fees. The reason that Shermax was raising over 100 million rand a month was that the financial advisors were earning in the region of 10 to 16% fees on what people were investing. And, quite frankly, the reason I like platforms is that they don't have human involvement and they allow people. And really where artificial intelligence is going, just to give you some stats on this, I found out recently, I've just got back from South by Southwest. I'll be sharing on Thursday for all our wealth partners. If you're a wealth partner, I'd recommend you don't miss this. But doctors' diagnosis, they're only 38% accurate right at the moment. So when a doctor does a diagnosis on a human being, their average is 38% accuracy. Artificial intelligence is now over 95%. Robo-advising, which is where it takes your personal needs and gives you advice, doesn't get involved in the human problem, the human bias of, hey, if I help you get into this investment, I get more fees. Or if I do this, I might get to my quota by the end of the month. Robo-advising just helps you do what's best for you. And really where the world's going now, whether you're a local investor, whether you're a global investor, what I get super excited about is big data, artificial intelligence, robo-advising, because it's really going to get rid of all the middlemen. It's going to cut out the costs. It's going to allow people to really be able to make the right decisions. And, Dolf mentioned it, over 80% of people that invest overseas out of South Africa actually lose money. That's why I wrote my book with Clem Santa. Well, I didn't write it with Clem Santa, but it got endorsed by Clem Santa. He's the foreword here in the book. And back in 2014, I know I need to update the book. But the reason I haven't actually written version 2 is that we're building it all into the platform as we speak at the moment. And because, I always joke, but like my mother's the only person who's ever actually read this book from cover to cover. And people, don't want to read 200 and something pages. And so we just want to build it all into an app so that literally you can make smart investing available to absolutely anyone. And literally through their cell phone, they can sit here and they can make wise decisions of where they want to invest. And that's really where I see the future going in terms of what's happening. So Pedro said to assist with where to hold money investment. Okay, Pedro, so yeah, we can take that offline. I was hoping to see you on Friday morning. You were supposed to be at the event, but I see you didn't turn up, so we should have a chat. Boom, boom, boom. Okay, after the term of each deal is over, do investors get part of the appreciation, capital growth? So yes. Paulo, you're investing. So I always say to people, when you catch an Uber, you get in a car, it's got 4 wheels, a driver, and an engine, and it takes you from A to B. Like, nothing's really changed. All the technology's done is greatly enhance the process, cut out the cost, cut out the middleman, and increase the trust, transparency, and accessibility. We're doing exactly the same thing. Like, Paulo, if you and me bought a house, we'd need to know what structure we're going to own it in. We'd need to agree who's going to manage it. We'd need to agree how the dividends are going to be earned or the income return is going to be earned, on a monthly or quarterly basis. And then we need to agree how we're going to exit the building and how we're going to, distribute the capital appreciation on the property. All that we've done, it's exactly the same. We've just made it a hell of a lot more efficient using technology. Cut the costs, cut out the middleman, increase the trust, the transparency, and the accessibility. And so, very much so, you're part of the deal. You earn the capital growth, you earn the capital appreciation. It's calculated on the back end. Every project you go into has both a term to invest and also an exit strategy. And that's what the internal rate of return is, which allows people to know what their overall growth year on year is expected in terms of the investment. If you do want to speak to an asset manager, I'd suggest you go into more detail there. How is capital growth filed with the IRS? Well, you only file capital growth once you actually have earned the capital growth, and there's a number of ways that we work there, and we do help everyone from a tax perspective. The IRS, for those who don't know, is in America. Locally or as an income in the country. So to answer your question, in every country, the tax starts where the asset is. So if the property is in America, then you start in America. If you bring your money back to South Africa, then they're generally dual tax between America and South Africa. But we can help you legally make sure that you've set that up right and are managing that right. Can you list all the Wealth Migrate staff on the website with their positions and contact details to enable us to who's who when you refer to them? Good idea, David. Thank you for a good idea. So hopefully, Milani, you're writing down all these good ideas, or if you could please go through all the details, all the questions with all the good ideas, I'd appreciate it. Germany, are you looking here? What do the fundamentals look like? But partners on the ground may be a big issue. So interesting enough here, I spoke to Gunther, who was online tonight. I don't know if he's still online. Germany is a market to look at. What most people don't understand in the residential space is that over 78% of Germans lease. They've got very, very tight social laws around rent controls, etc. And equally, you need to look at the numbers and the returns. Generally, in some of the biggest cities, you're earning returns of 2-3%. So it hasn't made sense to us yet. Henny and I have tended to want to stick to English-speaking countries where we understand the language and also the regulation. We do want to go into Europe, and we will go into Europe when we find the right partners and when the time is right in those markets. As an example, Peter Fenstra has done a lot of work in Europe, and there's some other very sophisticated South Africans we're talking at that have done a lot of big business in Europe, and we will go into Europe when the time is right. What are the tax implications on the dividends? So again, great question, Bradley. If you do look at any of the properties, so if you look at Cyprus or Medical 7, just an example, if you download the fact sheet, so if you log in, you sign up on the platform, and then you get access to all the, all the information about the deal. We've actually got all the tax implications. So it takes like $1,000, it takes $10,000, and it actually shows you how the tax implications work. Do I just go on your website to qualify for the $100? No, Desmond. We will send you an email with your unique voucher, although you do need to be on the platform to be able to go in the draw to win the 0 to 1 apartment. So I'd highly recommend that you sign up on the platform and start learning, looking, watching, and seeing what's happening. What about investing in Malta? That's interesting. So Malta, I spoke a lot about. There's 16 different countries I spoke about in chapter 10 of this book, where I spoke about countries that you can get passports in. I've heard very mixed opinions of Malta, including a lot of people investing there and not getting passports. Saying that, though, it is one of the markets that we are looking to unlock, because I know a lot of South Africans are wanting to invest there because of the opportunity to get an EU passport. I am very concerned around the property fundamentals on the ground. Same with Cyprus and other markets where they give away passports. There's a reason a country gives away a passport. Portugal, Malta, Cyprus. So you've got to be very, very careful on the property fundamentals. But if we can find the right partners, it would be something we would consider. And that, it looks like, is all the questions. So unless any questions come through quickly, I think we will be signing out for this evening. I've got to be up at 6 a.m. tomorrow morning for a meeting with America. It's one of the challenges of being involved in a global business is that people live in global time zones. And so I need to get to bed so that I too can get up at 6, and then I fly to Durban tomorrow to present in Durban, and then down to Cape Town on Thursday. So that's all from my side. Again, ladies and gentlemen, it's an honor and a privilege to have you all online tonight. And really, from my perspective, thank you for all the ideas. Oh, I forgot about this last slide. I probably should have put this up a lot earlier. Sorry about that. But the next step, speaks to an asset manager, come to the events, get online, sign up. Sign up to get the $100, and then start investing. Start the journey. Start learning by doing. I'm not giving you financial advice. I'm just telling you what's worked for me. I got started at a very young age. I did my first property project when I was 13 years old, and really, like Dolf said, it's the best thing you can ever do. And a lot of people tell you all the risks. You know, when I started in London in 2002, everyone said the market was going to crash, and you know, England was bombing Afghanistan, and oil prices were going to go up, and then interest rates were going to go up, and there's lots of doom and gloom. Well, it still maintains my best investment I ever made to this day. And you know, I wish I'd just bought more properties back in 2002. And so, like Dolf said, it's all about riding cycles. It's all about getting the timing right. But most importantly, you know, what I've learned over now 19 years of international investment is that the most important thing is actually about finding the right partners. And I put this in the video. There's only two things to succeed. It's about getting the right information, and it's about getting the right partners. And why I'm excited in terms of where technology is going is that you don't have to do it on your own anymore. There are people out there that will share the information, make sure they don't have a vested interest. So, you know, if I've only ever helped people invest in England or London more specifically, then I'm going to keep telling you why London's the best place to invest on the planet. Whereas when we're helping people invest in multiple markets around the world, we then allowed to share why we're investing in those markets, and we're not tied to one market or one opinion, because that's just how we get paid. And the second thing is it's about finding the right partners. Make sure you've got the right partners on the ground so that you can go out there and succeed. So that's all from my side. Hopefully we've had a lot of value to you tonight. I apologize I didn't bring this last slide up earlier, just in terms of contact details. So if you want to email Jason or SMS Jason, then you can, and he can coordinate in terms of the information. But there's been a lot of great questions and great ideas shared tonight. I really appreciate it. And yeah, guys, you've got our emails. You know, just share it with us. You've got Jason's email. If there's anything you want to know, any great webinars you think we should do, any great topics we should do, anyone that we should interview, whether in South Africa or globally, let us know. We want to continue to add value to you, and hopefully, you know, we continue to live by Zig Ziglar's principle. The more value that we add to you, the more value that we can, you know, add in the greater principle. And, you know, Zig Ziglar's principle is, I can have anything I want in life if I help enough other people get what they want. And that's really the principle we built all our businesses upon. So that's really, you know, where we come from. Thanks for sharing. I've watched your growth and stature over the years. Thank you very much, Zaid, for the kind words. If you have 10,000 to invest, do put on the platform, or in a building through your platform. So it's, I see what you mean, Zaid. Let me give you a call with regards to that. I think you're asking, is it better, you know, to be a wealth partner or to invest in the property? It depends. They're very different investments. One's property, one is private equity. Yeah, so I'll give you a shot around that. And then lastly, the last question here was, what do you mean by sign up? Register on the website, invest. Thanks for the evening. So Costa, I mean literally go to wealthmigrate.com and register as a user on the platform, and you can then be in the draw for the 0 to 1 building, which the competition, as I said to you, is only launching in the next couple of weeks. And equally, anyone who's been online tonight will get a voucher, and you'll be able to invest $100 from us so that we can help other people, you know, learn and start to feel. Oh, I tried to hold that off until the end, but it didn't happen. Help other people feel what it's like to be an investor. Scott, we're trying to invest in Medical 7. It states 500 internal server issue. Thank you, Ian, for giving me feedback. I don't know. I'll have to ask people what's going on. If there's a problem tonight, I'll make sure it gets rectified tomorrow. But yeah, let us know if there's any problems. You've got my number, Ian. And anyone else, you know, just reach out to Jason. Technology is our best friend. It's making all our lives better, but sometimes it doesn't always work in terms of where we are. Okay, I'm going to call it quits. It's very late here. Thanks for everyone's time. I really appreciate all of the questions and the energy. It's been awesome, and hopefully we added value to you tonight. Good night. Cheers.